Good morning. February, March 2nd. We're live. We're going to be streaming stocks, options, futures. And yeah, let me get set up here. Get a little gas going. Of course. We're starting off with that riff. Looks like market is gap down this morning. Morning, Christopher. Yeah, so the levels that we weren't breaking, we just decided to gap through them, so it could just be a sell-off day. Gonna be looking for bounces too short. Yeah. Just kind of weird though if we don't get a big sell-off, because this is just looks like it wants a big red day. Maybe it's today. Just no support through that. Anyways, let me get here. Share it on Twitter. Morning, Ace. Mexican American. Buenos días. Right. BBBY with a little gap up. Had a big spike down there. I don't know if that triggered any stop losses. 1.5%. Oh my gosh, and that gas is ripping again. I actually did buy, let's see, did I buy one last night? I think I got more. Yeah, I have 5 now. That's crazy. You can't leave it, you can't leave this thing alone for a little bit. It just goes. Wild. Alright. Oh, initial jobless claims was this morning, wasn't it? Or no, what is that? Let me see. Yeah, initial jobless claims was this morning. So here's the report. Continuing jobless claims was at 8:30. Forecast was 160. Oh, right at forecast. Initial jobless claims forecast just under forecast. So met expectations. Market can probably just keep selling off though. Oh, nat gas storage is at 10:30. Ooh. I don't know if I should hold through that or not. You guys remind me, 10:30 nat gas. That it might just be a dip to buy, or it might be just like, I don't know, the top. Dallas comes at 8:30 right here, so not much of a reaction. Funko had earnings down 27%. 2-year yield is at 4.92%. 10 years at 4%. 90 basis point inversion, biggest since 1983. Morning SHF. Came to BBBY open interest. Yeah, let's see what it was yesterday. So 1.5, so we had 29,000 yesterday. How much that changes. Round 3 of Helbiz, did it sell off? Yeah, it had that after hour spike though. I mean, if you bought once it filled the gap, then you would have had to close here. Still up a bit from it, up 5%. But yeah, you're just getting a little risky. That said, I mean, if the gap's not even fully filled, if it holds up some of these levels, just wait for a little momentum. This thing will go crazy again. I want to have volume held into today. Could get spicy. Yeah, above 1.5 would be good for today, and above 2 for tomorrow. Maybe. GME is down 0.77. SPY is down 0.5%. This price action looked weird on GME yesterday coming into close. It was just like increasing volume and just stair stepping down, and it was inversing SPY. Kind of odd. And then this big order, 100,000 order after hours, but it was kind of before hours. I don't know. On my chart on Webull, it kept showing it. It'd show it like this and then show it up here. I was like, what is happening? Yeah, I put it on Discord. So showing this. This is normal trading hours, just is not showing extended. So show this big spike out, this big volume, and then it, like a minute later, then it flashed back to this. And then it did that like 4 times. Then a minute later, it flashed back to this. Oh, hi. But I guess they decided to go with this pattern. Yeah. Selling Tesla puts it open? No. I don't have Tesla. I put debit spread, so I'm not really trying to play volatility. I'm trying to get I have a price target. I'm trying to get the gap fill down here. I don't think this is over at all. I've got until March 17th is OPEX, so we've got 2 weeks on it. I think the downtrend is just getting started. But we'll see. If the market starts to show some unusual strength, then maybe I'll close it. But yeah, so far pre-market, Tesla's broken through those supports, and it was already set up for a downtrend. It got held up elevated for investor day hype. Even though SPY from here has now come back down to like here, so Tesla has to catch up. And catch up it will. Sub 150 today? Maybe. Yeah, good. Very possible. Which time frame do you think TA holds up best in? There's not like a certain time frame TA holds up best. The longer the time frame, just the longer, the more solid it is. That makes sense. Like the more probable, more or less. You know, like because this is a long-term trend to break. So once it starts, you're gonna have volatility, but it's gonna be smooth. See how it's all much smoother on much longer time frame. These are monthly candles, so the further you go out in time, the smoother, kind of, I guess you could say the more reliable. But as far as like moving averages and all sorts of different types of TA, just like candlesticks and that kind of thing, that could be more shorter term. Let me get you guys Discordian link. You got some 200 puts? Nice. Morning, Jason. Thanks for your guys' likes. We're at 10 of them. Well done. Appreciate it. Our Discord if you haven't jumped on it. Do it. Thanks for your 10 likes, guys. We've got about 2 minutes to open. Jobless claims came in basically in line. Let's see what else is going on here. Jim Cramer said he made a mistake about. Really? No, I didn't. Tells me why. It's building a floor, so probably start spiking up with some downs. You know what I mean? So maybe still a wick down here to that gap fill. Could very well happen even right here in the morning. That's kind of a big move, but good. I mean, you almost got it in that pre-market. But it really might not feel like gap either. Yeah, the gap fill at 130 never got filled. Yeah, it does. This does still look like it has some negative beta. What do I need to pay attention to here? I've got top shares. It kind of came down a little bit. Let's see if it's holding up still. Yeah, I like it. I like where it's holding up. Nice bull flag. This could be a nice entry today. Could get more, I suppose. Just a nice bull flag. Not resistance that I see until $1.05 and $1.19. All right, market just opened. IronNet. Oh, what's going on here? Polestar, BuzzFeed are on the top of my list. Macy's is up a bit. Oh, my bearish stuff on GME. I need to make sure GME continues to flush. Or I need to close it. Let me fix some levels here. Weird move. I have to look at the futures. like that. What's below here though? Nothing. You've got some room to go if we break down. And really, like down here, this is it. Maybe there's a little pit stop. For a bounce to maybe short. Be slow. That gas coming down a little bit. Usually does it open. GME rallying up. It's up a quarter. BBBY 3.4, 4%. Good volume so far, 3 million. That cash open. 3.5 million was yesterday in the 5 minutes. We are at almost 3 million already in the first 2 minutes. Let the games begin. Yeah, I'm still down on my Tesla actually. Close to break even. I averaged into it. Helb is up 6%. That's good that it's bouncing off of, well, not really anything yet. Tesla's getting a bit of a bounce. Big Lots is up almost 7%. GME's now down 1%. Macy's is up 8%. Carvana or AMC. It's not looking good for Carvana short term. But see what it does if it bounces off this 50 again. A break of that and probably keep coming down. AMC, I don't know. It's just such a big wide range. Chop. UWMC up 3.5. I'm gonna look for some covered calls on this one today. See if we fill this gap. I think it's about to. I'll give that a little time to rally. Helb is up 5%. Coal's up 4.25. Looks like retail is doing good today. Other than GameStop. That gas kind of flushing back down to VWAP here. Rallying a bit. Give me below 18. Yep, 1786. BBBY kind of giving up the gains. I think it's probably going to go red. You're all about buying stuff that's getting beat down. Always the contrarian. Do they have earnings or something? So Macy's, Big Lots, these retail ones can actually squeeze also. GME is down 2%. Macy's has had some crazy moves. Buys coming down. Delayed. Okay, now I'm green on my Tesla play. Did take an average down. Oh, an annual report, Silvergate did. Big Lots is moving up, 12.5%. They had earnings. So 4.2 million in that first 5 minutes is pretty high volume on BBBY. Yesterday was 3.5. Day before was 3.4. 5.2 is the other day. So buy's making a move down here. Hey trader, still GME goes down to 10 or 15. Does that make it more likely we will see above? Make it more likely we'll see above 24? More likely than what? Buy's coming down here. Setting up an engulfing candle. Didn't want to jump in this early, but might just get one of these meltdown all day moves. So if we're repeating March pattern, which we should know, if it keeps coming down and it makes a double bottom, and that'll be known by bouncing at this level or even RSI divergence, then yeah, I think 24 and beyond. Yeah, see, this is an engulfing candle. It's about to set up here. Shoot, man. I don't want that this early. I want some gap fill to short it. Yeah, if we get double bottom, I definitely think 24. Or yeah, I mean, maybe not as big of a run as this, but maybe bigger. You know, because this had the added pressure of Ryan Cohen buying. But maybe they'll buy again, you know? So if we just go from like that, 45 puts us at like 37. So figure 37. Yeah, that's kind of even resistance from back here. So didn't give an engulfing candle. Maybe I'm going long here on SPY for the gap fill. Maybe this is the final dip. I don't know. They've done a good job pushing off obligations, it seems like, if there are still any, and giving people doubt. Just the best thing to do before the end. Birds is up 2.25. BBBY back up 2.5. Looking good. UWMC now 6.3%. Did it fill that gap? Yep, filled that gap over here. See if it starts to. Oh, SPY's coming back down there. Yeah, I'm gonna do some covered calls on that UWMC. Yep, March. There's no liquidity on this chain. Hmm. Jeez. Hard to do cover calls in this thing. Spreads are so wide. Okay. Put an order to sell some covered calls. I put it at the ask, which is just a huge spread, so I don't know. BBBY up 4.5. Yeah. Weeble recognize that engulfing Weeble. Got last night at 148. Nice. GME is down 2.5. Tesla's looks like it wants to rally a bit. Hey, Jan. That's what worries me on the final dip thing. Yeah. Yeah, you don't need to sell here. I mean, if you've got long term on it and you're able to hold it, but you're not getting money on covered calls, which is kind of annoying. But yeah, I would wait. I mean, you've got maybe $2 more to go for a potential bounce. Las Vegas expecting to dip to 6, then rip up to 10, 12. Dip to 6? What stock are you talking about? Big Lots is up 15% now. I like when BBBY is green enough it's up on my watch list. I don't have to be watching it so close. I can tell if it's gonna, when it starts moving, it just moves up and down my list over here. BBBY 1.6 up 7%. See what happens up here. AMC. Oh, I don't know. Circa's moving too. I don't even know. Where is this from? Yesterday's high was 164. A little spiky here. It's up 7%. So 1.61. Covered call things. No, I mean the premium on the options right now is much lower than it's been, so it's you if you trusted the TA of it coming down, you could do covered calls, but it is more risky just because the premium is so low. So once Ivy's back up like 150% and we're at a higher price, then it's a safer in the sense of you're making more and it's easier to roll. You need to. All right, broke that line. I don't know what that line's from, but broke that line. 160.40 is, or 1640 is yesterday's high. Still haven't broken that, but we're up 8.5% or so on BBBY. Volume is looking good. See if we have kind of a repeat of yesterday. If we start holding above VWAP, I'll probably start adding shares there. $160.30 is the high right now. 630. Is just basically flat from open. Big Lots up 11.5. Macy's up 11.5. Waiting to see if we get a break there, we might start to get an explosive move. I don't know if it's too early or not, but I need some more consolidating down here first, but maybe not. 1680 would be a big break too. Might roll my 2.5s this morning. See if I can roll those down to next week. Oh. I'll just leave him actually. Because if the momentum's changed, might just let him get assigned and then get the shares at 2.5. Seems like we're going to be waiting a little longer. I'll roll another week. So it's kind of wicking down now. Not breaking out yet. No, Gigi's talking about changing it. It could be another year or two before it actually gets changed to T+1. Five. Just hitting resistance at that 50. See if it breaks that. We got 393 is kind of the next level up. Yesterday's one of their supports, and then resistance pre-market. Bed Bath hanging out up here. Still not barcoding yet. Still in a normal looking price action. SPY breaking that 50. Well, I don't have margin for big ES anymore since I got another nat gas. Probably good. If I get a good setup, I'll sell one of my nat gas for it. This was down 30% after hours? What? BBBY still sitting there, 8% or so. Not breaking yet. SPY's moving up. Pulling GME up a bit. GME's down to 1%. That's just getting a bit of a rally from it. I'm not seeing that big gap down on GNS. You got a glitch. That gas back to VWAP. UWM. C. Consolidating right before this resistance. It might have a break on there. So trying to bounce. See if it bounces up to 192, 194 area. Prior support. Space is up 3%. Glad you bought it yesterday. Red again. I don't see GNS was down 30% after hours at all. Yeah, this is looking good. Looking like a starting to build a bottom. Might need a catalyst to get a squeeze going, but nice to see where there's enough buying pressure support and the chart doing something other than just grinding down. Might open some more cash secured puts actually, or shares. I don't know. These $1.50s, 8 cents. Next week's are 20 cents. UWMC looks like it wants to go. Break of 492. That'd be a actually big level to break. Oh, there it goes. Bull flag breaking out. See if this covered call gets filled. How high the VWAP is today. That would be a pretty high level to hold if we do. Nice, well done, Grunt. Nice little average down. 1.5 put selling off. I might do it in the money cover call on UWMC. So without looking at extended hours, this resistance looks a little more prominent. Kind of interesting how that works just from that wick from yesterday. Okay. So it looks like BBY is rejecting a breakout for now. Breakout of yesterday's high. And it's back down to VWAP. I think it'll probably come below VWAP today, I'm assuming. Maybe 15.19 down here, or maybe even 14.70. We'll just see where it finds support. No, I don't look at Discord. That's why it's gone to crap. No, it just gets full of gifts when I'm not around. So I tell people to come in here. Yeah, I mean, we could do the same type of deal as yesterday. Just before the hour closes. SI, I guess, delayed their 10Q filing and other sketchy stuff. I don't know enough about it. Sometimes around hours, yeah, for one, you'll get data that comes out. So that'll move the market. Other things that happen around the hours are markets around the world that are closing or opening. So you get volume coming in or volume leaving, and so there's that. You bought now, Jim? You gotta buy when it's boring. It's fine to buy now, just don't sell if it comes down here. This is exciting. This is the morning excitement. And it just rejected that high, so buy's moving up here further. But it's not like it's gonna get much better price probably than here. So if you quit trying to time the bottom, be golden. SPY's now filling that gap. BBY is holding above VWAP. SPY is ripping. Tesla's filling the gap. UWMC is breaking out. Put in an order. Let's see if it fills. Yeah, Reddit might come down. SPY's ripping up through, filling that gap. Let's see them failing. See SI failing. I feel like spoofs don't disappear until they're about to get filled. But yeah, maybe it was. Yeah, not a sell wall until 175. You've got some bid support at 138, 135, and 130. Just looking at the options chain here. I'm gonna see where I can get cover calls in UWMC. No liquidity on it. Sell to open. Okay. UWMC 8% now. Oh, $5 there on UWMC. Did they I mean, they had good earnings. It's just continuation, I think, from it. We're getting price target raised also. Price target raised to 350. Let's rip it to 5. Raise price target to 550. Buys filling that gap. Bed Bath below VWAP. We've been going bankrupt. Eventually. Threshold list 35 days, 56% SI. I've seen 100% SI on it. So those numbers are exciting, but don't always mean much. As there's lots of loopholes and ways for them to navigate around obligations. Yeah, I might look into some more 1.5 puts. Short puts on BBBY. This ROI is pretty nice. 17 cents for $150 or $1.50. I got to my level. Expecting it a little bit. What is that level? Pre-market? Yeah, it's one of the pre-market highs. And the support from yesterday. Oh, I think we're seeing buying. You're just seeing internalization, and the powers that be have to allow this thing to go. We don't have control over the stock market. We're not in a system where supply and demand affect the price. Little inverted head and shoulders is still building there on the hour. 4 hour, everything's looking good. Kind of building its own little inverted head and shoulders. Daily, we still just holding on to that engulfing and a little tick up on the RSI. Within a laws. Green Day, yeah. I mean, just consolidating at this level would honestly be fine. Give we have a lot of time to build up support here. Give people time to buy in at this cheap level. Could be green, even if it's red. Like again, now we're just looking to hold supports. 136. But with an engulfing candle, it is, to me, it's a little more bullish, so might not test down there again. It's at 157.3. It's up 5%. It did double top though this morning with yesterday's high. So might still have a move back down to $1.50. I'm gonna wait to open those cash secured puts. I think it'll come down more. WMC. Might be a good short on SPY here. Be patient. You've lost big time with BBY at 4. Now it's your turn. Yeah, it needs a catalyst. That's true. You just want to get further from your cost basis, Jim. You just can't handle seeing red. but I get it. Tesla's still on the grind up gap fill. SPY's actually looking solid now. Or strong. Another level right here for a SPY top potentially the day. That isn't it at all. GME has no volume. So my put debit spread up 31%. I'm now into my break even though, which is nice. As long as it stays below 1807, I won't lose money. By March. OPEX. Oh yeah, I forgot about tops. Top. That's not it. Tops is down 6. Who's going with this thing if I should cut losses or what? Did have a big wick down there, huh? Little stop loss trigger maybe. Still looks pretty solid. It bounced out of there. Holding this support back here. Give this some time. SPY just hanging out up here. UWM back at $5. AC is up 12 and a quarter. Big lots coming down a bit. We're gonna flush today. You might see some. I think we're probably gonna hold some supports though. Run up after open was FTD cover on the day. Maybe. Tricky little guy. My bullish just comes from that TA. Post them all. We'll be seeing you back once it's up at the highs. Or when you buy back in. Setting up a bull flag now. Got a bullish MACD. I think that gap fill is probably in play. Guess I could do some micro longs. Okay, I picked up a few micro longs on the ES. Move up for this gap fill. Maybe at 395.08. BBY bouncing on that 50 moving average. This is a recall for sensors. Running people over. Yeah, I'm just gonna be adding also. Now that we got that engulfing candle, it could come down some, but just add if it comes down. Yep, don't try and time the bottom, that's right. GME, yeah, just shut off. It literally looks like it's shut off. Is it trading? Coming down a bit now. UWMC broke $5. Barely. Tops is holding up. Yep. That gas bounced off of VWAP. Fish get more? Yes, probably. UNG here. Just grinding up through these highs. I'll wait. I'm up to 5 contracts. Maybe this was the top. SPY's coming down here a bit. Do have a bullish MACD. We don't have any green over the 9 yet. This is kind of a resistance, so maybe the long there was a silly idea. We'll see though. This downtrend is earlier for GME. Okay. That gas is bouncing a little earlier. Not really. I mean, really close. We still don't know when earnings is going to be either. The timing that matters is the bottom, and that it happens before earnings. Yeah, I'm jumping out of those little micro ESs. It's choppy. I want the short on the longer term, so I should trade my short term with my long term in mind. Loading up on Theta. $half calls. Buys flushing now through VWAP. That might have been the top. Yep. There it's. Ooh, that's a pretty big flush. The wrong way. I should have gone short. Instead of trading the pattern, trade the range. Times. Just choppy. Chop, chop. What's Zella doing? They have earnings or something? It's up 41%. You're going to get calls? Now it says 51 million of new funding. Hmm. I'd buy more if I could. You waiting for more funds to settle Ace, or you're just too heavy in? Let's pile up the gamma. Let's not. Hope to sell GME 24 week sauce. What would Nancy Pelosi do? Smart. Although her trades recently weren't as good. I saw a lot of Roblox calls that expired out the money. You just let them go. $3 calls are cheap. Yeah, that's because it's double the price that it is right now for 2 weeks. It's not cheap. Just very low probability. Nothing is cheap on this options chain. %313% IV. You have a 21% chance of this being in the money. Wow, that's a big wick there, Spy. BBY holding that 50 moving average. So does someone move down to mid-March and ups? Well, it won't even be the week. Why you're not gonna have earnings on a Friday? Why not? Deep pallet snowball? Wow. 36 inches in 24 hours. 90 in 7 days. That's crazy. That's like city closing amounts. Might have good news. Yeah, I don't know what good news would be. They just said they're keeping their eye out and want the ability to be able to maybe make an acquisition. So I don't think they will announce who they're, unless it's already done. Ace is heavy in. Well, you're not going to do cover calls on your DRS shares. 300 inches is a lot for there. Pretty wet snow there, isn't it? In Snowball or no? 10,000 feet. More than 3,000 hedge funds have shut over the last 5 years, far exceeding the number of launches during that period. Lincoln said, serious problem if China gives Russia military aid. Probably already happened. Yikes. Oh, now SPY's moving up. I got shaken out. Shake out. We think investors are realizing that sticky core inflation may mean the Fed hikes rates further and holds them there for longer than markets had expected. That was the head of BlackRock. Wells Fargo no longer expects Fed to cut interest rates in 2023. Sees terminal rate at 5.25 to 5.5 versus prior estimate of 3.5 to 3.75. I don't know why they were expecting it to be so low. Even Powell never said that. He's always been at 5. Credit Suisse shares fall to new record low. High rates will result in a staggering increase in interest payments on America's $31 trillion debt. BBBY is holding up really well. It's up 5%. Haven't seen any barcoding yet. SPY is ripping here, sort of. GME is actually awake. Like it might pop up. Nat gas is bouncing still a little bit on VWAP. Drier than California. Yeah. Yeah, I suppose with that elevation, you probably dries it out some. That's probably nice. I really actually don't like two drive powder. You just sink all the way through it. It's just you don't feel anything. That sounds crazy, but like super dry powder where you're just going through it and like on it. Just yeah. Been on that one horse but never won. Um BBBY, it's back above VWAP. I don't say it's fighting to stay above it yet. Why IMX? I don't know. They're in the void. Yeah, you want a little bit of moisture in it, or just yeah. For snowboarding at least. I could say it for snowshoeing too. Yeah, you just fall right through it. That's true. Yeah, you can transfer over to a brokerage. That gas moved down a bit, wicked through VWAP. BBBY still holding up nicely. Ops. Like it to kind of hold this level. I have enough conviction to ride this thing down for another bounce. Fighting in a good way. Yeah. Yeah, it's kind of doing what we did over here this day. Or it's trading VWAP, just that's kind of the median. Not quite to that point, but VWAP's pretty high today though. Mexican roads are not okay for snow. UWMC, come on. Gosh, I really don't like Fidelity. I do, but their browser version is just stupid. Really awful. Spy filling that gap, look at that. Give me a little pop up with it. Okay, I keep bringing my strike down on my covered calls on UWMC. Hopefully it gets filled. I going for that gap fill. Like to see tops hold this level. Oh. Okay, I might cut losses on here. It's holding up alright, but I was hoping for a move today already. It's hoping for a little more of a dip to do some cash secured puts, but I haven't seen it yet on Bed Bath. Oh, you can't open it. Why is that still? What about buying power in here? Fine, I'll put it on here. These wicks on SPY. Morning, Gilead. Yeah, no, I'm not reading Discord. I can't actively be reading it during the day. I go back and review stuff and check stuff out. I don't have both chats up, is what you were asking. I have to cycle. Any data? Yeah, we had initial jobless claims this morning. Basically at expectations. Might be a good short here. Got a double doji. I'm gonna wait though. I don't like how choppy it is. Alright, I put an order in for $50 cash code puts on BBBY for next Friday. So these strikes right here. I have it at 18. Or no, what is it? 19? What? Oh, this is delayed. Wait, what the heck? Is it really that much? 18. That's nice. Since this is delayed 15 minutes, I can see what the pricing was in the past. Oh no, that's the wrong month. Oh yeah, there you go. I can just look at the chart of the history, but that's kind of cool too. Buy's coming down here a little bit. Still holding Turka. There you go. Look at that thing grinding up. 23%. Well done. Yeah, broke out heavy. Have you taken any off the table or you just full position still? Oh, nat gas flush through VWAP. Yeah, you've got your next level on there is, well, you're kind of actually at a level there. About. But then you got a little gap fill up to 64 cents. If you're up 100%, you could sell half and make it free. Take off all your risk. I should. It's still early, Tenzin. Still early. Basically the same price it's been for so long. It's lower than the price it's been for so long. You know, it's $1.80 just like a week ago. That bounce get me filled. Oh, still not filled. I basically have to do it at the bid. Give it to the market maker, let him play with it. It's annoying. Could do some cover calls on BBBY. For 60 cents, cash out. $1.80 a week ago. Not 180. Wasn't this a week ago? Yeah, 217. Friday before last. Actually, it was at $2. So, still cheap. Hit $1.77 just last week, a week ago. NK 140. Yeah, not sure we'll get there, but yeah, good. This is the support we need to hold now, basically. We don't need to, but it seems like it probably will hold this 138. So scaling in anywhere from here all the way down to here makes sense, I guess. But it's not 100%, because then if it breaks there, you want more to buy. More money to buy with. Third monitor fund for Discord. I don't really want to respond on Discord either, because I want people on Discord to come to the stream. So if people have questions or want to chat, they can come here. I'm trying to, yeah. Jeez, UWMC is getting get filled. What's going on? I like refresh it and it doesn't replace my order. Oh, I have to refresh the whole thing. There's like a little refresh thing on here. Doesn't do anything. Great, got cover call filled here instead of here because it wasn't actually refreshing. It is primed on the daily. Indeed, it is. But even just consolidation down here in the range would be fine until we get a news catalyst. Let the options continue to get cheaper, make them more attractive. Even though they somehow have not come down. But yeah, if we just start consolidating here, I'd be happy with that. Some kind of range. Maybe 160, 170 at the top and 140 at the bottom. Just have incredible volatility. Yearly? What was the low on GME? Win. $15.41? Yeah, we're not there. Give it a few more days. I'm not sure how the IV has stayed so high. It's something that's perplexed me. Maybe just demand? Because there's so much volume and liquidity on the options chain that it's just kept the IV high. But it shouldn't really affect IV necessarily. I don't know. I really don't know. It's been good for selling premium. I mean, I've had to roll down a lot because just continue to go down, but hopefully now my $1.50 will finally get out of the money by Friday. And then, yeah, that'll be nice. Yeah, the cover call says I'm down 30% on. Stupid. Stupid UWMC spread. Yeah, on my long term, I've got 50 of these $1.50 cash secured puts, which was $916 credit. And they're up 50% now, so I could close them, I guess. That would maybe be prudent. I'll probably hold them and just roll on Friday. Top's ripping yet? No, but it is holding up. Be fine to hold. I just don't want to look another. I'll look at more. Pressure calls are absurd. I think BBY is a better buy as far as short-term trade potential. It's more risky. Well, actually, right now I wouldn't say it's more risky. Once GME gets to, if it gets to 16s or even 15s, then this is a lot less risky to me as far as upside potential. But I think the upside potential on GME is much smaller than the potential on BBBY in the short term. But I think the risk on the upside for BBBY is probably greater. If GME was repeating last March and we see that in the pattern, that will be, to me, the probability of a move up at least 50% would be very highly probable. As opposed to BBY, it's kind of we're waiting on news and just following some TA, and there's not some chart that's going through cycles that we can track. I mean, you can kind of track it, but I'm not as familiar with it like I am GME. So yeah, it's like your capital in for a more secure 50%, maybe 100% move, or the capital in for less secure. It's risk reward. Is moving up here, but BBY has become more safe since they basically pushed bankruptcy off and are paying off their interest payments. And so if you're willing to hold it for a longer term, then the upside I think is greater than GME fundamentally. If there's some crazy squeeze on GME, then yeah. But fundamentally, BBBY I think is undervalued compared to GME. Yeah, GME supports like 15 something. Like that's the wick 1540. You'd say that, I mean, that was the very bottom, so support would probably be around here in this 1620 range. Maybe with the wick down in the 15s. Buys moving up there. Look at BBBY just grinding up that 50 moving average. Yeah, you could do cover calls for sure. I mean, the IV is so high, I don't know if you should, Jim, because you would probably buy it back after we're rallying and take a loss, which I don't know if I've ever had good luck with that. So if I sell cover calls, I think I've only had success if I commit to it and just hold it and then roll it up if I need to. If I don't commit to it and it starts to rally and I buy them back, just trying to time the market too much and just get in trouble. But if you want to collect premium, you could sell the puts. That's what I'm doing, because that's a bullish play. I mean, or you could do that and just roll it or let it get called away. Yeah, with what you're trying to do, maybe smaller gains, like finding fine with capping your gains and buying shares here and selling $2 calls is it's a money printer. Like if BY goes to $20, it's gonna be like, oh man, I missed out on all those gains. But until then, or if it doesn't, you're gonna be working that theta farm. Whoa, big rip on SPY. Yeah. Yeah, no, fundamentally, I think GME is in a much safer position than BBBY for sure. As far as valuation, though, GME has got a very high valuation. In this current economic climate we're in. 2 years ago, no, it was maybe undervalued at times or, about right. But Bed Bath, I mean, if they can do it, what they're trying to do, it seems like, even without a merger or acquisition or anything like that, uh, their market cap's 182 million. That's goofy for the amount of revenue this company does. Buys almost fully filled that gap. Yeah, I think this one will. It should be better. See what kind of cash flow they have. Positive cash flow. If it's increased. EPS numbers might be better. All right, BBY breaking down below the 50. Got a bearish MACD, right under the 9 moving average. Might see a low coming in here. And it's also with the SPY rallying, so it'd be a little inverse beta both ways. Oh, well, still haven't had any barcoding today. So that gap fill is not really at a certain level. See if it fills that and rejects, or if it continues up to a level at least. Well, I could do cover calls on the shares, yeah. Sketches me out. Oh, you could do it daily. You could just day trade them. I forget you can just do that. I never scalp cover calls. But holding overnight with cover calls to me is It's just the risk of news after hours and it going up 100%. A lot of gains you'd be missing. But intraday, it does make sense. Should have done it. Turka hit that resistance yet? 58 cents. Moved back down to VWAP. Holding for 60 cents, you say, huh? $0.60 would be an interesting spot. That's above this resistance, and it's already starting to fill the gap. So I would say this high would be the very highest that I would sell it. 58.76. I would sell it before there somewhere. It might not get all the way there because people front run. And that's what you got to, 58. So if it consolidates and it keeps going, then it'll probably go past 60. You're probably gonna get a full gap fill. And even past that, maybe. Depends on how long you're willing to hold it. You want it to hold VWAP here though. Or you might be in that play for a couple weeks before it happens. Or maybe another week. Eyes moving up here. Property 7, nice. Well done. Yeah. One of the mistakes I make is getting back into stuff too quick, or just getting back into trades in general after taking profits. Not letting the money just marinate and grow roots. Just throwing it back out there and pouring it out. Then I lose it. Then it's not happy money. I filled that gap and it's rallying. Tesla, GME aren't moving with it. Not sure what's pushing this buy. Oil's up a bit. Dollar's coming down. Yep. So gap's filled. Maybe 395 for a short. Uh-huh. There's an RSI divergence here on the hourly. On the 4-hour too, there's a bit of a divergence, but it's not really fully formed yet. So yeah, we might be in for some ups. Jeez, yeah. Yep, taking profits and then just chilling. BBBY about to pop. Any moment I imagine, but no, momentum wise it's bearish. We're under VWAP. Got bearish MACD right under the 9. However, it is holding that 50 moving average still, which is pretty impressive. I could see it move back down here though to the, what is this, the low. It's kind of this support. $1.50, yeah. Yeah. I wouldn't think that's too far-fetched. So that wick there looks, it might get to, it might be a top on SPY. The gap is filled. This might be the short entry. Maybe more time. Wait. You still have red box there? Nice. Don't have a DVD player either. Chicken soup for the soul. This is just some choppy stuff to be trading. So much different than like yesterday. Much cleaner. This is like, whoa. Alright. BBBY. I've got an order. See if it gets filled. I think at 150. If it gets down to 150, I might get filled on that. Building a little bull flag. Oh, VHS here. Yeah, SPY is gonna keep moving up probably. These weekly covered calls looking like. Oh, dude, the options. The options are barcoding. Look at this. The price on the options. That makes sense actually. On my cash secured puts, it's like even numbers, like 50%. So weird. So anyways, if you sold these, yeah, you maybe could have gotten a fill. The high was 7 cents. That would have been your best bet. Maybe you could have gotten it for 6. 6 cents covered calls this morning. You're buying back now for 3 cents, so 50% could have made on those covered calls. Maybe even 2 cents. I don't like the barcoding options though. GME's not moved up with SPY yet. Tesla neither. Thanks for your likes, guys. I appreciate it. We're at 33. Not bad. It's even before noon. Okay, I think that's 33. You can count it if you want. Dang it. Hopping in a VHS tape. And then it didn't get rewound. They have to wait for it to rewind. Who didn't rewind this movie? Like you. You always rewind when you're done. Always. It does it automatically. You get to the end of the tape, it automatically rewinds. How could you just take it out before that happened? Wish is up 5%. Look at you! Be kind, rewind. That was a great movie. This actually might be a good play. Bouncing off of this all-time low. I've held Wish before. That gas is coming down more. Yeah, Tops is kind of holding this level though. I set up another bull flag. Crazy wicks everywhere. BBBY not really letting it drop much. Still holding up pretty well. We'll see a 150 test today though. Yeah, AMC is so volatile. But the option, the IV's just stayed high on it. So even if it has a big move, it's not like you're making a killing on the options. Market rate is pricing in all that volatility. Credit Suisse raises European Central Bank terminal rate forecast to 4 from 3.5. Credit Suisse sees two more 50 basis point rate hikes from ECB in March and May, followed by 25 BPS hikes in June and July. Why are we still listening to Credit Suisse? Oh, that's right, the natural gas numbers. I totally forgot. Where were you guys? That's when that gas dumped. Yeah, right at 10:30. So it's kind of sold off since then. Natural gas storage actual was negative 81 billion versus 71 billion. Previous estimates was 76 billion. So there's more, they have more natural gas stored than they estimated. So price will come down some. Makes sense, logical, that's good. What are you referring to, Ace, about Blockbuster buying Netflix? Was that a thing? I don't remember that. Carvana. Carvana's going 4%. Still in this downtrend though. GME just not giving us a very big day yet. Only down 1%. See once the SPY starts coming down, pulls it. Oh yeah, happy B-Day. Thanks. For that bull flag on SPY. It turned it down. I mean, you're comparing what Netflix was then to what it is now. There's no way to say that that would have all happened. That all happened with who's currently running Netflix. I mean, we're just stuck with the sleeves, mailing out DVDs. Alright, SPY's coming down after a nice bull flag is built, similar to what happened over here, but then it ripped, so maybe it's a dip buy, I don't know. I don't like the price action today though so far. Yeah, it should have closed before the storage numbers came out. Tanked it. Yeah, it would have been another company that coming out with digital though. Oh wait, no way to know. GME holding above VWAP. Yeah, I mean they could have done the same thing with Blockbuster. They didn't have to buy Netflix to do it. Could have started mailing out DVDs. They had all the stores, they had all the locations. They were set up to do it so much better than Netflix. It's basically like GameStop compared to Amazon, right? Because Netflix didn't have little hubs all over the country. They had probably certain distribution centers, and they were spread out, and you know you'd have to wait. You have to wait for your disc, and then if you think about Blockbuster just mailing out discs, you get it like same day maybe. I mean that would have been crazy back then to get stuff same day, but even just delivering, just having the employees deliver stuff, I don't know. They just needed to pivot with the times. I mean, Netflix transition from that to what they are now is crazy to think about. It's they literally made a new company just in the same space. Getting an engulfing candle now on this bull flag. So probably see 395. Looking for some consolidation and then some sign of a top to take a short. Remember Blockbuster trying to copy them? Were they mailing out discs? When merger announcement? I don't know. A stupid question to ask me. Greg? UWMC had a pretty big bounce off of 50 up to the VWAP. I don't think it would have mattered on my covered calls. I had to scoop. I have no scoop. I'm scoopless. Was Netflix? No, you still paid for each one, didn't you? For each movie that you rented? They didn't have like a subscription thing before they were digital, did they? Now, if GME doesn't, it just stays here. That'd be worse. It truly is fixed. We don't need to talk about GME. They did. Oh, that's right. Yeah, it was so many per month on a subscription. That's right. Okay, so that was clever. That was unique. That was new. That was innovated. Other trends was planned. Okay. Yeah, to have a subscription, to have basically free movies, you just pay a monthly subscription. Yeah, that was forward thinking. I mean, the whole subscription model, you know, that was before subscription had really blown up. 3 out at a time. You kept 3 movies at any time. Okay. Yeah, I like vaguely remember that. I think we had a Netflix subscription very briefly. Uh, Blockbuster's mail out disc. I don't remember that happening, but well, that was smart of Blockbuster. Why buy the business when they can just copy them? They just didn't copy them when they went digital. They probably had a lot of debt. Probably weren't able to make that transition. I don't know. Eyes coming down here now a little bit. VWAP's just been climbing though, so the move to VWAP's not very far down. BBBY is holding this level. I guess you could say this is barcoding. Yeah, it is. We're barcoding. $154. 154 is the low. 155 is the high. There you go. Oh, should I buy another nat gas? It's finding a support. He said 6 green candles in a row. Oh wait, I've got a good amount. If I could get like 100% move on that gas, that would be neat. 18. That's so hard. Yes. Oh, BBBY broke down below the barcode. Still up 2%. This new low is 153. See what happens at 150. See if my cash secured puts are going to get filled yet. They'll probably get filled. I might even raise it a little bit more. Raise it one more penny. Because it's already moved up where my order was at the ask. So we get a move down to 150. I think I'll probably be good. Yeah, that's what we were talking about, cash. Blockbuster buying Netflix. Which again, I mean, doesn't necessarily mean it would have been a good buy. Like, Blockbuster could have just run it the same way they're running Blockbuster. I bounces off the support we have here. Eyes coming down here. Got a high VWAP though to bounce on. U.S. Commerce Department Secretary says any proposed measure restrictions outbound investment should not be overly broad or hit 401ks. 401ks have already been hit. Walmart says in 2024, company will open 28 new Walmart Health Center locations. Hmm. Um, it's too difficult for them to go to a YouTube, like a different app. You know, can't be bothered. Even though they went to Discord from YouTube. Once you find Discord, you just get sucked into it. Look at that. BBIG's up today. 6%. Eyes moving down a little bit more. Oh, there's a pretty big flush on SPY. Just flush to VWAP. No way to see this. I mean, you have this engulfing candle here, but by the time it closed, it was way down here. And that was after it made this bull flag and all momentum is up. So, crappy price action for my style. I don't. I'll usually just see it when people share it, but there's links in the trading tools on Discord to check FTDs and
as
stuff.
long as we're holding above, well, we'll call it again this 215
yeah, I'll just
area.
when it comes out, I'll just look at whatever shared.
I guess Tom doesn't need to get below that area to hit his target price. So 215, 216 is a key area in this stock.
Okay. I've relied and trusted less and less on all of those numbers just because it doesn't matter. It doesn't seem like price action, technical analysis, that stayed pretty true, I guess. Max Pain, something I still look at sometimes. Like $1.55 is Max Pain on BBY this week. They might get that. Close over $1.50 would be pretty good though.
Lies ahead for
we wanted to look at
Service
the open
Holdings,
interest.
which is trading around 163 today, higher after a good fourth quarter. More details.
I mean, is that a little bit more than it was? What was it, 22,000 before? Can't remember. BBY is coming down more now. Broke out of its barcode. Still positive on the day. Walmart hospitals. Yeah, the Evans Health Centers. It's a one-stop shop, man. Get your eyes checked, grab a sub, get your blood pressure checked, get your nails done, get your hair cut. They've literally done it all. That's what they were trying to do, and they've been pretty successful. SPY bounced on that VWAP. VWAP, VWAP. BBBY 1525 up 1.5%. See if we hold 150 or VWAP from yesterday, the 147 area. My size, this thing moves big sometimes. No idea why. Rumbles up 3%. Tesla still down. ACs is below VWAP. Big lots having a bounce back to VWAP. Give me no volume. Yeah, FTD numbers is, it's good insight. It just, I guess, like looking for settlement days and expecting price action on those days. Has hasn't panned out because they can finagle their way around everything. So you know, because people say, oh, it's going to run on this day because all these FTDs are due. But having a high number of FTDs is a good data point to consider. I've gone below VWAP. Yep. Yep. No, I definitely have similar experiences, so I just don't go. Take care of myself.
Quarter of 1%. The Nasdaq down 0.5%, 11,870. We are seeing the Russell right now.
Standard hours off, so look flaggy.
That's down about 0.5%,
Sure.
as we speak.
High breaking VWAP
I'd like
here.
to get to the tech side of things. Bring in senior market correspondent for the TD Ameritrade Network, Renita Young, is with us.
Maybe a short here if it holds below VWAP.
A different story than what we've seen in Salesforce.
This is engulfing, this candle
is lower.
being built.
Tell us about the earnings and what investors are focusing on.
Well, those earnings came in mixed yesterday because while
He's
adjusted
obsessed with
earnings
them.
per share and revenue came in above expectations, it was the outlook that's making this company bleed market share today. yesterday. So adjusted earnings was 14 cents, well above the estimate. Revenue was also above the estimate at $589 million. And then we have product growth, which was also above the estimate. It was expected to be 50% growth year over year, and it was 54%.
See how this candle closes.
And looking ahead for the current quarter, Snowflake expects product revenue to be in the range of between $568 million and $573 million. That is below the analyst expectations, right? And then the company, they're attributing a lot of this to the change in the existing consumer or customer purchasing behavior. Said that really did lead to the decrease in
dance
new
around
product
for a while,
revenue, the forecast. And so how Snowflake differs from its peers is that they're data analytics and management tools that run on cloud computing. They're not specifically a cloud computing company just that way, but they run on platforms like Amazon Web Services. But because Snowflake switched out its business model to be the consumption-based rather than subscription-based, that is leading bearish investors to be concerned over a possible U.S. recession curbing demand for its services right now. And so analysts are talking, of course, Raymond James lowering the price target to $170 from $180, but keeping an outperform rating. They say that they see some linear improvement in consumption, but it's also possible for opportunities for AI, the growing AI trend, to benefit this stock as well.
All right, Renita Young, thank you for that. Appreciate it. Senior markets correspondent here on the TD Ameritrade Network. Thanks, Renita. It's time for our spotlight. We're looking at Excel Service, and for that we welcome in the CEO, Rohit Kapoor, is with us. Excel Service, thanks for being here. You had a double beat, revenue on the rise, the stock not too far off 52-week highs. Things seem to be going well. Tell us a little bit about the quarter.
Oh, not going to engulf.
Thanks for having me here. So we had a wonderful fourth quarter, and we exited 22 with very strong momentum.
Oh, it didn't engulf. All right.
I think the key storyline for us is that our data-led strategy seems to be resonating very, very strongly in the marketplace. Everybody wants to leverage data, and you can do two fundamental things with data. One, you can enhance your customer experience, and two, you can create
a big run yesterday,
and reduce your
it's not even down today. It's up still.
So frankly, 1.8%. That double, benefit is something which every single company wants to drive towards.
This was yesterday.
Particularly in today's
we're still at the highs. We haven't even come back down to where we were yesterday.
From that trend that's taking place.
And that's the whole thing, improving that digital transformation.
It's setting up consolidation, which is exactly what we want. We haven't had consolidation in
journey as a company.
Months. This has all just been dropping. This was the last time it kind of had some consolidation.
Sure. So we've pivoted our business very strongly. We've got two fundamental
Here's more consolidation. This has to happen before we rally.
Analytics. That
unless if there's a news catalyst.
46% of our company's revenues. Here we help our clients store and manage data, derive insights from that data, and then apply those insights into their workflows so that these become intelligent workflows and they can deliver greater value to the end customer. And the second part is digital operations and solutions, where we take on operations for our clients on an end-to-end basis, and we introduce a lot of automation, a lot of artificial intelligence, and a lot of new capability that will be able to have a much, much better experience with the end consumer. So both of these businesses for us continue to kind of perform very strongly. And we continue to go deeper into data, deeper into the domain, and creating more impact and more value for our customers.
You are just being patient.
Yeah,
as long as you can
it really sounds exciting.
It's up 1.3%. It's holding really nice, actually.
Companies go through some of your clients.
From the extended hours?
Financials, healthcare companies, insurance companies.
This is a gift.
Very large companies?
You have all this upside.
Smaller end.
So typically for us, our client base is the Fortune 1000
You're back at this support, and you see all this happen pre-market.
Global multinationals. We work with
some people just trade this buy this way.
They
only trade it to whatever side it was pre-market. If it opened down here, they're only going to trade up.
So these are very large, companies. What they've got is they've got operations and their customer base spread out globally. They've got a lot of complexity in their business, and they've got underlying technology platforms that need to be modernized. For us, this is a sweet spot for us to be able to help them in terms of that digital transformation and help them modernize their data architecture as well as their analytical capabilities so that they can serve their end markets in a much more effective way and at a much lower, cost and at a much lower price point.
That's the thing.
You just had a
I might want the option to sell it today.
Buy rating on the company after the quarterly report, a $200 target. As we talk about some of the different things, you were talking about some of the
a little bit below
digital
VWAP.
solutions, data analytics. You also mentioned automation and AI. What
got
are your
bearish
thoughts
MACD,
on
red
the
into the
AI
9.
arms race that we are seeing
A little
from
bear
all
flag here,
different
but you're at
companies,
VWAP, which could definitely be support.
Like yours?
So that's a fascinating development that's taking place, and it seems to be accelerating the pathway towards the embedding of intelligence into, back office operations,
might still go with the short
customer interaction, and just improving the overall customer journey. We use a lot of AI and machine learning in our operations as well.
I went short.
And we think the trick
Seems
is
a little sketchy
to be able to leverage that technology for a specific
trust the
use
moving
case
averages,
that is helpful for our clients.
Divergence.
Applying generic capability is not going to be very helpful, and therefore there's a lot of customization that needs to take place. There's a lot of a deep understanding of our clients' business that needs to be there, and when you marry the two together, which is a strong understanding of the AI technology, and you combine that with deep domain knowledge and understanding of our clients' business, that's what creates the value for our customers.
Right, understood. All right, thank you for all of that. Rohit Kapoor, CEO,
Do you understand
Service. Thanks for being with us. Coming up next, the disruptors. We're taking a look at Okta following the latest earnings report. Kevin Green will be with us.
GME is just flat right above
show us
VWAP.
a way to trade it. Next on Trading 360.
Yeah, if it gets low, back to 15. Seems like a pretty safe bet, probably safer than BBBY. So yeah, I'm gonna be going pretty heavy too. Mostly probably with leaps close to the money. Maybe some shorter dates. Hopefully the options stay cheap. They should. 67%, that's insanely low. Oh, that's great. Yeah, I don't think we've seen that in years. I don't know if I've ever seen it on a GME. So they're high here, or higher, 90. Still, I remember saying if you get a double digits IV, like always buy it. But this is because that's probably for earnings. Oh, BBBY popping up a little bit there. Breaking out of this lower barcode. Wait, was this not a barcode? No, it was. Weird, it doesn't look like these look lower. Okay, I lowered my price on my cash secured put. Try and maybe get filled. Just a penny. Gonna bounce now on VWAP. Is that what's going on here? You're DRSing BBBY shares? You have earnings? Who has earnings?
Outperform as well. So you do have some positive comments from the analysts. Tell me about how you would go about trading this, especially after a big move today. I mean, it's up over 7% now.
Yeah, definitely. Well, from a chart standpoint, if you look at it from a technical standpoint, it really does track the 20-day moving average pretty significantly here. So knowing that and knowing that we just saw this pretty significant run to the upside and hitting
I haven't bought any more shares.
Around $81. We're actually a trader.
I have an order for more cash secured puts, which is
pullback to that
kind of like buying shares.
Average, which is sitting around that 75.5 level.
It's basically like a limit buy at $1.50.
We could do is buy a bear put
but
spread.
Since I'm receiving credit, it's like I'm buying it like
$76 put.
$1.45.
This is going to be for the March expiration, and we're doing this for 80 cents. So the max loss on this trade would be the amount that we pay for the trade, which is $80. The max gain could be $120, and that actually would be if the stock actually is below, at or below $76 by expiration. Then
subreddit BBY is
$77.
They're DRSing for sure.
This provides about a 1.5 to 1 risk reward ratio. The implied volatility has significantly dropped to the downside post earnings, which is not surprising, which is why we are trying to utilize a debit spread instead of selling a credit spread in this instance. So this would be a trade that we would see if you are expecting the stock to at least retrace back down to that 20-day moving average, like we said, which is around $75.50.
All right. Thank you for all of that. Kevin Green, a good look there at Okta. Thank you.
Oh, it filled.
Coming up next,
interesting.
Our 360 round.
Yeah, so I just opened up more cash secured puts on BBBY.
At least for the Dow. The stock is higher by 16% today, up 41% this year. Let's talk about this stock, which is at 6-month highs, basically. Our panel is ready. Next.
Looks like it wants to go up now. Whoa, look at that pop. Whatever, I'm cutting losses, I'm out. Small losses because I'm doing the smaller contracts. Can't force the trades. GME's getting a little pop with that. And rejected. It's weird it got filled on that little tick up and then tick down. So this trade, this is Theta farming stuff. I have it on this account because I'm the one I can't open trades on. But that's fine. It's just I should make this account safer. Anyways, so it's these. We got some call debit spreads. Maybe not enough time. We'll see. So upside to $2 on those. It's capped, and then these 1.5 cash secured puts. This is basically upside as long as it closes above $1.50 by next Friday. So I received $900 in credit to open it up, and yeah, then you just wait. If it goes up to, if BBY goes up to $2, then these will be, you know, will be profitable 50% of the profitability, 50% of the credit I received of the 900. So I can close it then. If it comes down to $1, these will be negative. Basically, probably about 50%. So, yeah. If anything, I could just let these expire in the money if it is in the money, and get assigned the shares, and I'd have 5,000 shares at $1.50 strike, and I still receive the credit of 900. So you can subtract 900 from the cost of the shares. So if you did that, it would be what? So $150 for 100 shares times 5,000. Oh, that's not right. $1 a share. Do this under pressure. Going on. Yeah. Oh, not $100.50 cash. Okay. So $7,500 is what it would cost to buy 5,000 shares of BBY at $1.50, right? So then just subtract the 900 I received in credit. So 6,600, what I'm paying for it. So divide 6,600 by the 5,000. That would be my cost basis, $1.32. So this is how you can buy shares for cheaper than the share price. Whee! Oh, now SPY's coming down. I should have to look away. So basically, if I let those get assigned, I'll own the shares at $1.37. No matter what the price is. If the price is $1, great. I will own it at $1.37. Price is $1.50, still own it at $1.37. If you want to equate it that way. Yeah, jumping in elbows, why not? Just treated you right. It might just consolidate for a bit, but so far it's holding this support very nice. A bit being, you know, could be a few days even. They have that catalyst in their back pocket too about the shorts. I mean, it's the downside is you're gonna own the shares at that price, so it's, if it goes to zero, then it's like owning stock that goes to zero. There's no like downside necessarily. Less downside than if you just bought the shares where they're at right now, because I'm buying for cheaper than this, more or less. Consolidation at VWAP. You are gonna have to look into them. Yep, cash period puts, and then covered calls. So you can do the same thing to the upside. Buys moving up here. You could buy shares, buy 100 shares of BBBY, put in your capital, 1,500, and then sell covered calls at $2 or $9. So I'm just doing the other side of it, where I'm receiving money while they hold my cash as collateral. This side, you're receiving money while they hold your shares as collateral. So if it goes above there, you basically sold your shares for $2 and you receive that premium. So even more than $2. Tesla's pretty weak for the SPY's somewhat strength above VWAP. Even GME's held up. Oh, BBBY moving up a bit. Yeah, it did. It kind of bounce a bit. If it's rejecting this 59. Whoa! That was a spike for sure of volume. Spike up to VWAP. Guess I could get more shares. Don't want to be too impatient. Might just consolidate here for a bit. Like the Theta farming, that makes sense. Until it starts to rally, then it's like, oh, I could have just bought shares. The max risk. So if you're selling, if the strike of your covered call is above your cost basis, there's zero risk. Yeah, you're capping your gains. Whenever you sell options, you're getting defined. Your profits are defined when you enter the trade. That's when you make your money. BY is getting kind of squeezy here. Gotta move up to VWAP. Volume. It's right at that 12 o'clock. Right around the hours. 12 o'clock margin calls. Hank? Business. SPY moving up here. BBBY getting a little poppy up to VWAP. No son of mine is gonna use coal on his grill. What the heck? You can't lose money selling cover call. The minute you get the premium and sell your shares below market value, it's still breaking even though you paid for them. You know, you get premium, sell the shares. You're not selling them below market value. Well, below market value if it's above the strike of the covered call at expiration. And you're not going to break even. You're going to make money. So if I bought BBBY at $1.56. I'd spend $156, get 100 shares. And then if I sold covered call for next Friday at $2, I'd get $10 to sell that covered call. So then I would you'd receive $10. You could subtract $10 from the buy price if you look at it like that. Then you would have bought BBY right now for $146 instead of $156, right? And then if BBY goes up to $2 and you let it expire in the money, you don't have to let them expire. You can roll and roll and roll. But if you're like, oh yeah, that's fine, I'll just take it at $2. It goes up to $2 and it expires in the money. They take your shares and you sold them for $2. So your shares you bought for $146. You receive that premium to sell that call. Then you're selling for $200. Right? Just do it in negatives, it's easier. They made $54. You can think of it like a limit sell. Then a cash secured put's like a limit buy. But you're receiving a credit. You're receiving money to agree to buy or sell it at that price. Turka, is it still going? Wall Street Wolf. It is, yeah, it's nice move above VWAP, holding up well and strong. I mean, like I said, if you're selling covered calls above your cost basis, you can't lose. Yeah, I know, Theta Farm. What you're losing is time. People aren't patient in the market. They want money, they want it fast. You can make money in the market, just don't expect to make it fast. If you can accept that you won't make it fast, then you can be very successful in the stock market. You can be patient. So the loss, you still have the risk of the share price going down in value. You're still going to lose the equity that you own. If it loses value on the market, then that's still the case. So if you buy it at $100.50 and you sell a cover call for $2 and then BBY's at $1, your equity still has come down that much in value. But that covered call is then worthless. So that $10 you received on there, you keep that, and then you can do it again. You just do it over and over and over and never stop. Continuously. And we're looking at short dated here. That's just a couple weeks. You look at like March or even next April, I mean, it's a lot more money. So this is $30. You could buy 100 shares at $1.50, $150, sell this cover call for $30. That's April monthlies. So BY is rejecting VWAP here. I've made lots of videos on it. Watch my wheel strategy playlist. There's probably a million videos on covered calls and cash secured puts. They do a great job. Great job explaining it. I could do another one though, and that is the conundrum and the problem with YouTube is doesn't matter if it's already been done 1,000 times. You make a video and people want to just see a new one saying the same thing. So yeah, it could still do well. It's crazy. Some of my better videos I've done on YouTube have been videos that have already been done. I've just done it again. It's like, okay, I learned all this from YouTube, and now I'm just showing you again. Here we go. Whee! You up 25% on it? Nice. Yeah. What's his name in here? He's up like 120 or something percent. I think he sold though. Yeah, he sold here, so we'll see if it breaks that. At 58, or yeah, 58 cents. You've got, I just see this resistance here, kind of. That's basically where you're at. So if it breaks that, then probably gonna fill that gap to 64 cents. Kind of breaks where you are right now. If you make anyone watch that, there you go. See, yeah, I have though on my wheel strategy playlist. It was videos just strictly created following my brokerage that I was just doing the wheel strategy on, and the wheel is just selling cash secured puts and selling covered calls. So I could pick that playlist back up. I'm doing quite a bit more now than I planned to though, streaming. But yeah, I could. It's boring and slow, but it makes money. Yeah, all gillied up. Yeah, you just need to know what to search for, and then you can find the answers. So, searching for covered call, searching for cash secured put. That's not it. Maybe just double topping here though. They need to break. You've got upside to like here or so. Wish is still up there, huh? Yeah, I was kind of looking at the daily here, seeing if it'd make an engulfing candle today. Might be a fun one to grab some shares on, if it does. Fun as in making money fun. See me kind of moving up a bit.
Let's go and take a look at those probabilities and see what happens. Then we're also going to get the CPI on the 14th. Let's see what happens there. It came in hotter than expected last time. So this is, again, guys, you know this. It's a moving target, but as it stands right now, it looks like, based on history, it's going to be 25, not 50.
Yeah. I think Nathan brings up a good point here, Kevin, that they're probably not going to stray from the consistency that they're trying to give the markets. We haven't seen the lag effect from some of the other hikes. It hasn't worked so far as inflationary pressures go at this point. But then you look on the corporate side, you know, CRM earnings pretty good, Snowflake pretty bad. This is going to be probably the theme here. It's a have and have-nots as far as corporate earnings goes.
Well, I think when it comes to all these things that the Fed is going to look at the data and react. I mean, you're right, 20, 25, 32%, not enough to make the Fed really pay attention. Some people, the more hawkish people like Bullard, like Loretta Mester, they'll come out with their 50 basis points, but we're not there yet. Tom. But we all have to admit that inflation is reigniting.
Yep, definitely. And I guarantee you, well, we don't guarantee anything on this show.
We're not allowed.
The probabilities are against a unanimous decision at the or the March 22nd meeting.
Did your shock collar go off when you said guarantee? You're not allowed to
that G word is not in our lexicon, guys. Come on now. Come on now.
Yeah.
None of that. All right, guys, let's take a quick break here. But when we come back,
looks like it'll actually come down now. See what happens at 880,
ahead of their earnings after the close here. Fast market's coming right back.
I still have a buy order for another one down here at 817. But I think I bought 2 since I even opened that one. But it could just find support anywhere and then rip, so I'm not going to close out what I have on it yet. Kind of want to get another leap today. Wait till tomorrow. I don't have, my funds aren't settled on this account. It's not barcoding. Oh, maybe now it is. It wasn't barcoding for a while there. Elvis. 5% up. Got a long ways to climb if it's going to make that pre-market. Buys coming down. Back to VWAP here. %. Tops did hold that support, I wondered. Bye. Elba is 6% still. With some volume though. BBBY rejected VWAP. That's coming down. Just ugly price action, all after hours. On SPY. been holding on us during the day, just do it all in the after hours. It's bouncing on that support. BBIG up 10.5% now.
That 10-year at 4.09%, highest level that we've seen since about early November. Kev, but this is a company that retention rates 125%. The upsell that they have with existing customers provides about 50% of their revenue, but companies can't pull back on spending for cybersecurity, right?
No way. And this firm is kind of changing cybersecurity. There's no firewalls. They do this thing called zero trust, where everyone has to be checked, right? They have a
goose that keeps giving.
Well, they named it zero trust, where everyone, even the CEO of the company, has to get access on a daily basis. So, but Nathan said the number one point here: with higher interest rates on the move, valuations are what weighs on this. It's growing at an incredibly fast rate. It's in the right field that isn't going anywhere, but the valuation is high based on not only where it is, but interest rates in general.
Yeah, revenues grew 62% last year, 54% last quarter. Billings are starting to slow just a little bit, but these are pretty good growth numbers. But Nathan, you got an example trade for us here in Zscaler, implied volatility elevated going into this report.
Yeah, absolutely. So, when you're looking at an earnings event, as we're going into here with Zscaler, looking at the charts, see a little bit of no man's land sandwiched in between the 200 SMA and the 50 SMA. Looking over the last 4 quarters, it has beat EPS all 4 times. Over the last 3 quarters, it's gapped up post-earnings. You look at the likes of Fortinet and Palo Alto, gapped up post-earnings. That seems to bode well, but you got to ask yourself, well, what kind of market environment are we in? I'm still keeping my eye on that 200 SMA on the S&P. The NASDAQ actually is the NASDAQ composite. Kevin mentioned it on the NASDAQ 100. We are kind of flirting just below that 200 SMA. NASDAQ composite is below
GME is just melting up here
at 11,500 and the 200 SMA. And not surprisingly, given what yields are doing. So you might feel, well, maybe I don't want to be too bullish heading to something like this. So what I put together was an example trade. Let's assume you're bullish, looking at the history over the last 3 quarters that it's gapped up post-earnings and looking at the likes of the other cybersecurity companies. First, I was going to put on, let's start with the risk reversal. What is that? Selling an out-of-the-money put and using those funds to help buy an out-of-the-money call. I selected specifically the 122 put for tomorrow that expires, and purchasing the 138
This is a nice way to go long.
Also purchases tomorrow, but I'd like to set this up in a way that I can get out of here with a credit if the stock doesn't react post-earnings, meaning it's flat, or it doesn't move up that much, or it doesn't move down that much. So I'm going to turn this into a risk reversal call spread, and I'm going to do that by selling. Same expiration, just go up to the 144 strike and sell that call. Last I looked, by selling that
BBBY,
122 put, buying that 138
you can
call,
sell
and then converting that
cash
into a
good
spread
puts
by
and just
selling
buy
the
shares with the
144
premium.
call. It was about $1.50
So
credit. And you guys might also notice that the strikes I selected on that 122
sell
put
these
roughly coincides with the 50 SMA, and the 144
and then take the $5 you
roughly
receive
coincides with the
$5
200
for the
SMA.
shares.
Yeah, let's break this. This is a customized type of risk reversal trade because you're doing the call vertical as opposed to just a call, Kev. But selling the 122 strike put in the March 3rd weekly series expires tomorrow's close. Buying the 138, 144 call vertical. Net credit we've got here about $1.40.
Don't talk yourself into selling it.
About a dime
now.
Don't
want to sell it, then don't. Just wait.
That. But taking in that credit takes your break even all the way down to
BBY moving up, BBY moving up, net gas coming
That's
down.
over $10 below the current share price. Option market's pricing about a plus or minus $13 move. But this gives you that cushion, and that short put helps pay for the bullish call vertical that you're buying.
It's a call vertical. It's a cash secured put. I like what Nathan likes about this spread, which is by selling the 144 call, it's trading between 250 and 270. You turn this into a credit.
Right.
Therefore, it's the old adage: if nothing happens, you collected a credit and you can be profitable if it stays right where it is or it stays in a range. So there's the part of this that makes this more attractive. Now, downside risk, of course you do.
The shares I sold had a cost basis of like 60.
A cash secured put. So it is going to be a little higher, but you are doing it for a credit. And in terms of profitability, if nothing happens, if your assumption that it might go higher is wrong and it sits there,
that's irrelevant.
You've still
it's
got
what it's worth
a
right
net
then,
credit to collect.
Yeah, you collect that net credit. You add that to the width of the call vertical that you're buying, the 138, 144. So $740 a max gain on that above that 144 strike. But as you mentioned, Kevin, if the stock stays here, even goes lower, but remains above 122, you're going to get to keep that credit that you collected. Now, you mentioned the risk on this. You do have that cash secured put or naked put there. So down all the way down to zero, you got $12,000 in risk if for some reason that stock did fall that way also. And you have some assignment risk on that short 122 put also. But a good look at a bullish trade. You're capping some of your gains, but I like the fact that, Nathan, what you said was you're using that upside call to help finance the trade where you're collecting a credit, right?
No volume. Has showed pretty good relative strength,
that's the thing. It's taken into consideration the environment that we're in. Yes, Fortinet and Palo Alto did really well, but markets feel a little bit tentative right now, so you really don't know. You can't be sure that they're going to, perform as Palo Alto and Fortinet did. And the other thing, you guys mentioned the assignment risk. Yeah, keep in mind, if you put a strategy like this on, you got to say, I like the long-term fundamentals and Zscaler. If you want to give it to me at 120.60, bring it on.
Yep. You have to be willing to buy those shares,
I'm gonna get some
have that capital
calls to cover
available.
earnings on
But
GME.
a great look at an upside trade that's kind of still neutral, too, where you can remain profitable. All right, thanks to Nathan Peterson, Director of Derivatives Analysis at the Schwab Center for Financial Research, helping us break down markets and Zscaler. But coming up after the break, Kevin and I are going to be joined by Megan Brantley.
Because I think it's going to come down to 16 or so, but of course it always couldn't. Always have to. Getting a little spiky here. GME's up 0.5% now. With a bit of volume. All the president. Maybe I should close my bearish play? I don't know. Moving up with the market, but today's relative strength on GME has been pretty good. Get quite a bit of volume on that little pop. BBY just right below VWAP here.
level's got to be good here because, just from my own experience, I'm a big fan of Costco. I like going to the store. I don't like the crowds. But, what kind of data are you guys seeing out of Likefolio?
Yeah, so whenever we look at Costco, you make a good point. It kind of takes away a little bit of our edge because they do report this monthly, their monthly sales, and
GME
so
could get a
pre-earnings
run up.
January
could have the rally before earnings,
to,
like AMC did.
February glimpse, and
that's all I can think
that
AMC had this rally
really good point that happiness is really, really important, and that's one thing that we're seeing just thematically as a whole, especially as companies report this quarter, is that happiness level, whether or not companies can retain those consumers and keep attracting them back is more important than perhaps ever. And when you look at Costco versus other peers, so when we look at Costco versus Sam's Club and Costco versus BJ's Wholesale, Costco is still the top of the pack. And I think it's also interesting to note that while Costco sits here at the top in terms of overall levels of consumer happiness, when you look at its membership pricing, Costco's membership price is actually higher versus these peers. I think it's about $10 more than a Sam's Club membership. Its base price and it's $5 more than BJ's. So Costco obviously has a high value proposition to customers for it to be, the top of the pack in terms of what you're paying for this membership, but also to keep customers happier.
Whoa.
And when we look at these membership mentions, even like on Google, consumers who are looking and searching things like, what is a Costco membership?
GME's getting support of SPY.
We see significant outperformance there as well, that, Costco is still this clear leader. And I will say in our data, from a new membership perspective, so, how is Costco generating those new members and how good are they attracting new people to the table. But we are seeing a little bit of a flatness, at least in ours.
Yeah, okay.
We're
So
not
close my bearish play
for
for
profit mentioned, so we're not necessarily worried about that. But there is a bit of flatness occurring in that membership growth. And so for us, when we look at this from an overall earnings perspective, our data is trending a bit neutral, and that's partially just because of the heavy influence of people who are talking about buying a new membership. But I think it's also too important to remember that Costco is operating almost in this essential space, right? And right now in the macro environment that we're looking at, we're seeing a big shift in companies that provide consumers with the essentials and with staples that they need versus Costco or versus companies that are more tilted toward discretionary items, perhaps like a Best Buy. And so we see Costco more in this essentials category. And I think that that's one thing that's driving this happiness higher is because consumers see these perceived deals. They see the benefits of being able to go and, buy in bulk if they need to, access, affordable produce and things like that. And then, it's just that ultimate cost savings effect. And I think this chart is interesting, and I want to point this out because it's kind of a dichotomy that we're seeing whenever we listen to consumers. There's it's almost like a tale of two cities. You have one camp of consumers who are perhaps higher earning. Maybe they can afford a premium membership like a Costco membership. And so they're utilizing this membership to buy in bulk and save over the long term over these more essential items versus consumers who may not be able to afford this that are having to turn to a company perhaps like a Walmart to seek those savings because they can't afford to buy in bulk. So it's a really interesting picture when we look at Costco. I'm curious what you guys are watching heading into earnings.
Megan, there's a funny joke out there about Costco that I went to Costco to buy paper towels. I ended up buying a helicopter in the Cleveland Browns. And so, that's kind of the joke about people that buy too many things at Costco. And some people don't have room for 100 things of ramen, right? And all these bulk items, or they don't eat them fast enough. But Costco is enormously popular. The Kirkland brand, something that we've talked to Likefolio about in the past, is incredibly popular. But Megan, at any point, is there competition coming? You've got competition on your board, on your slides with Sam's Club and BJ's, but are these really competition? Who's their number one competition? Is it Walmart? Is it Amazon? Who's the companies that really come close to Costco?
That's a really good question. I think from a happiness perspective, the company that probably comes closest to Costco is more like a Target because, this is perceived as a premium retail experience. You're excited to go to Costco. You're excited to go to Target. You're excited to find what you're going to discover, which
got
is
an
a
order
way that
for
Costco kind of separates
end
itself.
of month
But then
calls.
also you could look at Costco almost as a competitor to a Walmart, because also when you go to both of these locations, you're perceiving that you're retaining value. The customer gets value. So I think it's brilliant of Costco to be able to position itself in both camps. And you're right. I think the last time I went to Costco, I really did go in seeking paper towels, and I came out with a dog bed.
There it is.
They do have this discovery element that I think is really powerful. And another good point that you made is their Kirkland brand. Whenever we talked about Costco happiness, we know that Costco customers report being happier versus peers from other companies. And the Kirkland brand is a big driver of this. And this is also kind of a major theme that we see, just this shift in consumers.
And now I can't even change my order because it says I'm out of buying power.
That just happened. Brand. We saw this in Target's earnings, where Target said, our private label brand growth outperformed
I was able to get an order out.
Sales growth. And we look at the Kirkland brand for Costco, and just to give scale, so I think Costco's consumer happiness is about 72% positive. The Kirkland brand specifically is 83% positive. So this is a major driver for Costco and a major kind of value proposition for consumers, that they feel like they can get a high quality brand or
GME looks like it's wanting to wake up in the middle of the day, which would make sense when it's in the worst.
Some of the data that you had buying in bulk,
TA
I
possible.
kind of looked at that. The last two readings on this are
its
starting to
run up
fall
right now,
a
even though we
bit.
don't know when earnings are coming.
Potentially on your data, a continuation of that, which wouldn't be a positive, and then do you have an earnings score for it?
Yeah, so buying in bulk, that's definitely something that we're watching, because you can see whenever you look at the chart on the far right bar, that's a pretty big drop. And one thing that we know is that we know consumers who are, lower earning, they may be stretched, their budgets may be stressed, they can't afford to buy in bulk. But we have to ask ourselves, is this the Costco consumer? If a consumer is already paying a membership, are they likely to fall into this camp? We're not for sure. So this is definitely just something to monitor moving forward, that, is this persistent inflation and rising food price concerns, is that going to start to weigh as the consumer is going to start to pull back on that spending a bit? And that's definitely something that we'll watch for. But heading into earnings, we're pretty neutral. Again, we don't have as much of an edge as we typically have, because Costco
is up
reports
6
sales
1/4.
monthly. But then also we do see a little bit of a flattening in these membership prices,
BBBY popping up here.
New membership additions, that is. And so for us, we're in the neutral camp heading into earnings. But long term, we think, if anything, this is a nice long term bet. Costco consumers, that happiness level is really strong, and we don't see significant rates of cancellation mentioned. So I think that that's really important too. So neutral for earnings, but I think that you could make a bullish case as a long-term
AMC
investor.
a little bit. It's
they
different.
have that ability to raise prices. Typically, they raise them on membership fees every 5 years.
92% renewal on membership fees.
Yeah,
it's unbelievably loyal.
You don't
it
give
started
that
pretty
out,
close
typically.
similar time.
The data
Not
shows
quite
that.
the
All
same
right. Great stuff as always, Megan. Appreciate it.
aggressiveness.
Yeah, thanks for having me, guys.
All
I don't
right,
know if
that's
those are
Megan
correlated
Bradley,
right
Vice
now. I don't think
President of
BBY
Research
and
at
GME are
Bitfolio,
correlated
breaking
right
down
now.
Costco for us. Kev, those
Lots to go
Or
through here.
AMC.
Yeah, lots of
GME is
the
moving
monthly
with the
data
SPY
that
more or
they
less.
give.
BBY still looks
retention
untethered.
rates. They have the ability
Doing
to
it
raise
once.
prices. They said 2 quarters
AMC
ago
is-
they're not going to, because
it's more with SPY.
it would hurt the consumer. So your take.
I read a great article this morning about
But
Costco.
GME
that
shows
says,
that relative strength
with
to
all
SPY,
the good
that's
things
what we need.
going on in Costco, and there are a lot of them, make no mistake, still, in terms of a price-earnings ratio, that was 39
maybe nice
on
short
February
there.
2nd when
Would've
the
been
stock was
double
just
top.
$523. Now it's 36. But Tom, you look at a 10-year average, it's closer to 25.
The ask is getting
So
some
this
activity.
stock, it's a darling of investors, but it's
Ask
not
resistance.
cheap
No.
in terms of valuation.
172,
Sitting at 36. Its
161.
long-term new average is 32. But it spent a lot of time below 30 and in the mid-20s. So you're not
Midday
buying it
rides
at a
the
cheap
memes.
level. But remember, I just said it was just $5.23. It sold off about $41. And if you look on the chart, this 465 level is really important. A lot of busy on the chart there. If you go back to last fall, a lot of things right around 465. So what I did, Tom, for earnings with Megan's kind of passive bullish play here, I kept it relatively fundamental, and I sold this week's 465, 460.
BBBY moving up a bit.
It's trading right now about 82 cents.
159.
And I did a little something, Tom, for our viewers. This week's is 82 cents. If you sell the next,
getting affected by SPY coming down.
You get $1.02. If you go out to March 17th, it's $1.15. So you see the trade-off there, but remember something. The further you go out, the longer that expected move gets, and the percentages drop down. This is a pretty good probability of out of the money here in a 1 week
the high there.
Or actually 2 days now. Yeah. So interesting.
More shares coming maybe?
3rd, 465, 460, put vertical, about 86 cents.
Yeah, we've got it up there about 90. It's come down just a little bit. But if you collect roughly about a 90-cent credit on that, you've got about $410 in risk. But you do have that cushion of about $16 to the downside, Kev. That's what the option market is pricing in.
Right on the money, and that lines up on the chart.
Yeah, as far as that anticipated market maker move, which can gyrate based on supply and demand and implied volatility on that. But your break even there, 461.10 to the downside on this neutral
very strong
to
day
bullish
so far, though, on
type of trade. Really short term. You've only got until expiration tomorrow. You do have some assignment risk on that short 465 put, but a neutral strategy. A little bit bullish also, taking advantage of the higher probability of success by selling the out-of-the-money put vertical. All right, Kev, that's going to do it for you, this segment. But when we come back after the break, we're going to take a look at Broadcom, which is up about 6% so far this year ahead of their earnings.
Probably should have kept my bearish play on GME, but oh well. Profit. Hellbiz is holding up well. Buy coming back down. Yeah, it's got distracted, but that was a rejection of a new high on SPY. I think my futures trading is messing with my margin. Those cash secured puts I sold earlier on BBBY. Remember I sold 50 of them for $1.50. $1.50 strike. Got filled like on this weird candle. So just intraday, those are up 19%. So 19% of the total credit I received was 900. So I could just close them right now if I wanted and be out of the play for 166. Or I can just wait and let this contracts continue to decay, especially if the price is above $1.50. This is my new favorite stock. It's a fun one. What's popping? GME was having a little move up, little 12 o'clock margin call move or something. But it was also when SPY was moving, so not holding too much weight, but it was kind of interesting. BBY popped up above VWAP. Holding nicely.
Pressures down. Ultimately, you know, I mentioned again the strong jobs report here, but you know, with stocks lower, not surprised to see we've got the greenback above 105. So some again, kind of divergent price activity here with the Dow strong relative to the other three majors, but with the indices for the most part lower, not surprised to see the greenback, the dollar back to this 105 level.
I guess it's stable.
Ben,
I mean, it's
real
just
quick
in
here
a downtrend
on yields.
for
We got that 10-year
like
back up to highs that we haven't seen since November. Mortgage rates are starting to go up. We had that mortgage applications number down 5.7%.
Or are you just saying
yesterday.
the price action, like how it's not
is
volatile
this going to create
anymore?
headwinds because it doesn't seem to be negatively affecting the
deal with SI, I think,
point,
was literally
this
high short
interest rate environment. Probably
they
not,
didn't file their
you know,
10Q or something
for equities.
And
yeah, the
I think
short
that
answer
causes
is yes,
sell-off.
but you know, we were talking about the dollar strength and tying
That's
into some of the weakness
news.
in the indices. I think
Bad
it's also
news with
tied
it.
to some of the movement we've seen in terms of 10-year yields back to those
Yeah, it
November
was just a move with
levels,
SPY.
right? And the 5-year nearing the October high up around 4.5%.
Just the SPY move.
Now, I did see something that was kind of interesting, and there you can see 10-year yields as we work our way back up to the highs from last year around 4.3. Now, in terms of that dollar relationship with yields,
could have held my
looking
bearish
at the 10-year back to November levels, the dollar, if it was back to November levels, it would be back to 110. So I think what we're seeing here is some strength in the euro currency after stronger than expected CPI data out of the Eurozone. So Tom, it's not just here in the US. I mean, again, that higher for longer environment that we're seeing, which it does feel like the market's accepted for now. Again, it's building on investor sentiment, to say the least.
Yeah, we'll see. We'll keep an eye on that, those rates and the dollar also for a little bit of direction for this equity market. All right, thanks to Ben Lichtenstein, host of the Future Show here on the network, breaking down markets for us. But now let's bring in Kevin Green, senior markets correspondent. We're talking Broadcom, AVGO, reporting after the close here, Kev. Stocks had a pretty good run over the last 5 months. It's come up from about $415 to where it is now. What's your take here on Broadcom?
Yeah, it's going to be a very interesting report here, Tom, especially as we are starting to approach that resistance level of about $600 to $610. We did previously reject that particular level, so we are going to see if this earnings announcement can push it through. That would be a positive sign for the bulls, but there's a lot of anticipation when it comes to the technical side of it that we could see a little bit of a pullback here. But the market right now is expecting revenues to come in at $8.89 billion. The adjusted earnings per share estimate right now is at $10.16. And we have about a 3.4% implied move for this stock, either to the upside or downside. And I did just look at the last 3 years. This is actually probably the highest IV that we've seen coming into this report, even though we are only looking at about a 3.5% move, which is actually very interesting to say the least. Now, their networking revenues, the company is expecting to see growth of about 20% year over year, and that's because of the strong adoption of the Tomahawk 4 product that they have, which could be utilized for the networking side as well as the data center side. And from a data center standpoint, they are looking to see server storage capacity revenue coming in at 50% year over year. And then last but not least, we continue to hear about 5G, Wi-Fi 6, Wi-Fi 6E, this new generation of broadband. And the company is looking for revenues to grow about 30% year over year. So overall, there's going to be a lot of information that we can glean from this earnings report. Obviously, we are seeing a transition for Apple to basically create their own chips when it comes to Wi-Fi and Bluetooth connectivity chips. And that's supposed to happen in 2025. Expect to get an update on that during the conference call. Right now, the company has provided some forecasts that has really tried to price that in, but I'm sure
came out of nowhere.
An updated forecast as
Kala
we get closer to
Pharmaceuticals
that
up
date.
15%.
Yeah, that and that acquisition of VMware, I think, is going to be on investors' minds at this point because they announced that in May of 2022. Still no clarity on that. All right, thanks, Kevin Green, senior markets correspondent here on the network.
All right, my call on GME got filled with that
AVGO. Now I'm going to turn to you, Kev. You know, I mentioned that run, 5-month run from about 4.
I mean, the chart is incredible. It's a V.
It is, and a lot of weakness because the VMware deal might not go through.
Right.
Apple is 20% of their revenue. And Apple said they're going to start making their own
makers on the
equipment
GME option chain. Something about it.
Mentioned. That's a concern.
The spreads don't seem that wide,
remember,
but then once you put in an order,
they just
ago,
and then Apple had to go back to
spread them way out.
Saying you're going to make them isn't the same.
Then you
but
just
you're
can't
right,
get a fill, and then you're chasing it.
Yeah. But,
and then once you get a fill, it just goes right back.
Also says they can fill that pretty easily.
The worst I've ever seen.
You're right. The VMware is kind of out there. It's the old regulatory review thing going on with that. You know, this company, they have a lot of free cash flow. They buy back $8.5 billion worth of stock last year, $13 billion for this year. So
I got March 31st, 18.5 calls in GME.
They get about 76% of their revenue from semiconductor solutions,
give some
is what they call it.
exposure
there
for
are
earnings.
2 parts of their business. The other was infrastructure software. So, I mean, the free cash flow is growing.
And I got to have my put debit spread on it.
I think this company's in a real good spot, but valuations, higher interest rates are all affecting these. But boy, the
chart still looks like it's coming down,
since the date
this is kind of interesting.
October 12th. Legendary stuff here.
Yeah, that $8.9 billion in revenue they're expected.
Ford plans to restart production of the electric F-150 on March 13th.
But I wanted to look at it. Kevin mentioned implied volatility elevated going into this report, plus or minus $18 in the shares going into this, according to anticipated market maker move based on supply and demand. So I looked at an iron condor, but I skewed it a little bit, Kevin, because we've seen some failures. We've seen some, outsized move to the upside, but
they also come out with good news and have crazy
but
squeezes.
I looked at something that takes advantage of higher implied volatility. Looked at an iron condor, but I made it unbalanced here a little bit more favorable to the downside, Kev. Going out to the March 3rd weekly series that expires at tomorrow's close, selling the 575, 572.5 put vertical, and then combine that with selling the 610, 615 call vertical, $5 wide on the upside, $2.50 wide on the downside. Collecting roughly, we've got a $1.70 credit. Remember, markets are wide in here. Price discovery might be warranted.
Always.
But if you collect a $1.70 credit, that means you've got $3.30 or $330 in risk on the upside above 615. And then on the downside, you've only got basically $80 in risk below 572.5. Your take here on a short iron condor, really short-term earnings play.
First thing that we talk about, whenever you look on your Thinkorswim platform and you see wide markets, always be concerned about liquidity and make sure you're doing price discovery, because you've got to get in this trade and you've got to get out for as little slippage as possible in terms of edge. So make sure you understand liquidity is a slight issue here in this. But now, getting to the trade, $5 on the upside, $2.50 on the downside. You've only got at $1.60, which where it's trading right
this is some
now.
Crappy,
you've only got 90 cents in risk on the downside, but there is risk in both directions. You've got about $3.40 on the upside, but like I said, you've skewed this. It's got about 2.5 short deltas. Why? Because the call vertical's wider, and that hedge is further away from the short option on the call side. So short 2.5 deltas, collecting a lot of theta between now and the end of the day Friday. So Tom, an iron condor looking for a range bound move.
Yeah, and I think a lot of times when people look at probabilities because this iron condor is basically just 2 short verticals, an out of the money put vertical.
And look, Jamie's not going to move its SPY on this one.
Now the probabilities that it remains below 610 at expiration about 78%. And above 575, about 73%, Kev. Is that what you look for on, neutral strategies like this? You want a better probability of success where, hey, the stock can move, but we want it to stay within those break evens.
Yeah, I mean, you're anything in the 70s is considered a high probability trade.
Circle sensitive to the concerns around Silvergate and are in the process of unwinding certain services with them. Notifying customers.
That is currently about $18.80 as we sit here, is part of the question going on. It's the link between implied volatility and the expected move. What happens is the
30-year fixed rate mortgages 6.65%.
And now you're betting
March 2 week versus 6.5%.
range. If it does, this is a winner. you're risk defined in case it doesn't stay within that range. So, you know, tighter on the downside than the upside. That's the trade-off there. But you're collecting $1.60. That's well over the 30 cents per dollar
so
on the upside
data
move.
coming out maybe is what moved the market.
It
12
checks off our boxes for risk defined, collecting theta, and high probability.
Yeah, definitely taking advantage of higher implied volatility, but you want a muted move in the stock post earnings. Real quick here, Kev, we got about a minute left. I just kind of wanted to get your take. We've got interest rates at 10-year near session highs, the dollar near session highs. Equities aren't getting hit right here. Yeah. Are you surprised by that? Because if you look at tech right now, the mega cap tech names besides Google Alphabet are all negative today.
Yeah, here's the thing. You've got to remember, and on February 2nd, right, about exactly a month ago, the S&P closed at 41.79. Yeah. So we're significantly corrected already. Right. And if you're a long-term looker at this market, you're right at the 200-day moving averages in the Nasdaq and S&P 500. It's getting interesting here. There's some two-way flow going on right now.
Yeah, I think that's a point that people are overlooking.
We've already
when you
corrected.
Say, why aren't we weak on the data and on rising yields and the rising dollar? But at the same time, look what had happened in February as rates were going up. We fell pretty significantly to 4 major indices. So that's something to keep in mind if you're wondering, hey, why isn't the market moving kind of consolidating?
GME hasn't announced earnings yet,
all right,
so we don't know.
That's going to do it for you and I today here on Fast Market.
Usually it's around the middle of the month. 15th. I think last year was on the 17th. Yeah, last year was on the 17th. That gas kind of bouncing here. Dare get another contract. I don't know. Volume. It starts to break out. That'll just be probably momentum volume or news. The volume has increased though since we've hit a bottom, and it has been increasing. We got lower and lower, building up some buying pressure. Yesterday's volume was 77 million. Today's stable GMEs. Yeah. That's more how I feel. Yeah, today I don't know. We haven't had a much of a spike of volume yet. It's only 1 o'clock, but morning we had some, but nothing midday really. We had yesterday. So if we do get that, we'll probably get a push through this high. This is 162. SPY's moving up here. It's a weird move on GME. I really wish I didn't let that fake me out or in. Paula's holding up here.
Relatively, obviously green on the session, but slowly but surely we're watching these down moves become smaller, a little bit less velocity. If you're looking for possibly an end of the selling, it has to start somewhere, right? Well, down 4 is all right now. Quite easily could retest those lows of the session where are about 30, 40 points lower, but also we're not that far from unchanged. So we'll see if this market can take this a little bit of momentum that it's got, and it can actually pull off a green day, at least in the Dow.
I know, I keep hoping for a reversal. Like yesterday, I was watching for the same thing, and we haven't been able to see it. So maybe today is the day. But as always on the show, we will focus on the individual movers. A ton of post-earnings moves to get through today. Not all positive. We will kick things off with our upvote and downvote segment. Then we will chart and trade those upvotes. Our FOMO discussion today is all things Tesla. Of course, selling off on the day after its investor event that was not able to please the streets. Very high expectations. And then I sat down with Carrie Schwab Pomerantz to talk about fractional shares and how to utilize them. Last but not least, we will look at our under 30 name today, which is Six Flags, actually higher on the heels of a better than expected fourth quarter.
Yeah, the message from Tesla, not enough to spur optimism today. We'll talk about that. I'm looking forward to that conversation. It's always great when you get a chance to talk to Carrie and talk about some of those different topics. So I'm looking forward to that. We'll talk some Six Flags. Not really my kind of place, but I know very popular. So we'll see how that company is doing. But let's start upvote, downvote. Not endorsements, not recommendations. All earnings movers here today. Going in all different directions, though. Let's start with Salesforce. This one's popping.
This one is popping. So shares are up about just shy of 12% now on the session. So really, what is a huge contributing factor to the Dow's strength, at least as of right now? Because this is a name that is really outperforming, just showing that not all of these cloud stocks are created equal. They are one of the best performers in the S&P 500 today, and actually the most actively traded within that index. They forecast that their profitability would increase this fiscal year as they do face activist shareholders that are focused on spending levels at the company. For their fiscal year, they projected widening profit margins and revenue that would actually surpass the street's expectations. They projected their adjusted operating margins of about 27%, up from 22.5% in their recently completed year. They did also beat on their bottom line and top line. Revenue growth has averaged, though, about 25% for years. It has since slowed due to the fact that we're seeing this company delay orders and its customers are demanding less of its services. So there was a bit of a mixed bag. It wasn't necessarily all optimistic, but it predicted now going forward a lot of metrics that beat the street's forecast. For example, its revenue for the next quarter, they do see to be higher than what the street had been expecting. Billings, which is a very key metric to this company as it does serve as a strong indicator of its revenue trends, rose 13% in the reported quarter and is expected to continue that strength now going forward. Analysts are expecting billings growth to stay near the single-digit range for the next 2 quarters, which would mark one of the slowest stretches in the company's history, but it's still in the double-digit percentages, at least as of this quarter, Alex. Netflix. So I would say the fact that they pretty much exceeded expectations on all fronts was the really sign of optimism, although this is a company that has, of course, undergone a major cost restructuring, laying off many of its employees, as well as closing down some of its real estate. So the bar was pretty low, I will say, for this company.
Yeah, and I actually spoke with Oliver this morning on Morning Trade Live for this one. He made the comparison sort of to what we've seen in Netflix, which was while it was kind of sinking in the early parts of last year, there wasn't this realization from the company that they needed to tighten things up and really focus on being a more efficient company. But once they did, they introduced some of those password sharing crackdown plans, introduced the ad-supported options as well, and it kind of pulled all these sort of backup plans out to really bolster the financial strength of the company. You saw Netflix turn around. You saw the same with Meta as it kind of shifted its focus away from, let's say, the metaverse investment and more towards resiliency and efficiency and cost cutting. The same is maybe playing out here in Salesforce. So we've seen Meta and Netflix lose their momentum as of late. Netflix particularly with the price cuts globally. So we'll see if this is just another one of these names that is taking advantage of this adaptation to the market environment that we're in, or if it's
a little bit of
really
food.
building something.
No, I wouldn't call that a
in
bull
spite of
flag.
the fact that its revenue growth
really.
is declining, as you said. But I am going to say
Holding up well though, above BWAP.
arguably alongside Tesla,
Looks good.
one of the stories of the day.
I agree, and I also think it's important not to discount the push of their activist investors, which was another major headline in Salesforce this morning. But our next name today, Macy's, also seeing a nice pop in reaction to its earnings. Actually, pre-market, I saw shares as much as 15% higher. Now it's up 10%. So we'll take it, and really bucking the retail trend we have seen thus far this week. Now, their CEO said the company elevated their approach to inventory management after high levels of inventory derailed their performance a year ago. Their adjusted earnings per share came in around $188 per share. This exceeded the street's forecasts on sales that did fall to about $8.3 billion. This was down from a year ago, but did also just narrowly exceed what the street had been expecting. Sales, though, were driven by strength in gifting and other special occasion categories, which they said included beauty, men's tailored apparel, dresses, and shoes, while sales in their active and casual wear did decline, as well as their home segment. Same-store sales at owned stores did fall just around 3% and fell about 2.7% at their owned plus licensed stores, but both figures were around 3% higher than pre-pandemic levels back in the same period of 2019. So still able to grow from where we once were. Their gross margin did contract slightly to 34% from about 36.5% a year ago, which the company attributed to the fact they had planned markdowns and promotions, which were higher than a year ago when inventory constraints then led to this low promotional activity. All in all, though, just a very different tone from several of the other retailers we've heard thus far. Kohl's being, I'd say, the closest comparison, although they are slightly different, but Kohl's negative reaction to its earnings, Macy's today shrugging all of that off with a nice pop.
Yeah, and honestly, when you look at this one, nothing about what Macy's did was overly impressive, but it wasn't that bad. I think that's the story of Macy's for the last 5-10 years, as it's attempted to navigate and find its way in this new environment in terms of how we're interacting as consumers with the products we want to purchase. And department stores just haven't been the way.
I already answered them.
Macy's in
you're not going to get an answer because they haven't announced it yet.
Standing in this space, it's navigated okay.
It'll probably be,
as best as I think investors can really hope for.
Yeah, it'll be this month.
And we'll see as it continues to try to find its role going
but they haven't
forward,
announced it, so
different channels and how it's going to exist. Is this is just not
the only dates we're seeing right now.
But
you
all
see,
things impressive, I would say.
GME earnings dates are estimated.
The market is reacting positively, up over 10%. It's a pretty impressive response. But you saw the year-long chart. There's ups, there's downs, and it kind of just has chopped sideways. That's been the story in Macy's for as long as I've been covering markets. So we'll see.
I don't even remember the dancing guy you're talking about.
And sort of watches as its peers fall. And now the one I can really think of, at least in publicly traded markets that are sort of this role, it's like Nordstrom's and Macy's at this point, Jenny.
Yeah, completely, and it's not great that they just closed the Macy's near us, because Ben was asking me earlier if I've been to a Macy's, and I said no, but it's not my fault because they just closed the closest Macy's, at least in my walk walking distance. Our next name today, though, seeing a completely different move than the other two names we just discussed, and that is Snowflake. Snowflake shares are down almost 14%, pacing
You're talking about this
one
guy?
of their worst days now in over a year, adding to the fact that this name is down over 46% from its yearly high, although still up about 20% from its low. So however you want to take it, but a name that has been a source of weakness really for quite some time, and they fell after forecasting lower revenue growth than what the street had been expecting. They do anticipate their product revenue to fall between 568 to 573 million now in the first quarter. For the full year, executives expect about 2.7 billion in product revenue, which did represent 40% growth from the year prior. They did also disclose they've received authorization for a share repurchase program of up to 2 billion, which they said will then help increase cash flow. They did also plan to hire more than 1,000 employees this year, which is a really interesting move because all we've heard from tech, Alex, is these layoffs. So that was not perceived as a positive, however, because what a massive move lower we're seeing today in Snowflake.
Yeah, and I think the way that I would look at this is this fits into that bucket that is just not what the investors are looking for right now. This is not where the more selective capital is finding its way. And so to be garnering that kind of attention in a
6%.
market environment that is not favoring growth companies, of which I would certainly classify Snowflake.
So I'm thinking about buying
to be exceptional.
Another large amount of BBBY,
disappointing guidance,
and then doing covered calls on it.
Beating by a wide margin and providing
kind of having two different portions.
Outlook. So they're doing a lot of things well. They're
half that I just leave uncovered,
shareholder-friendly actions like share repurchases,
the bigger upside, and the other half will just Theta farm
to continue to build this company, but. Investors are looking for the best-in-class type of a companies, and when you have names like Salesforce, sort of operating in adjacent ways within this cloud space, really performing well, and even this next one that's on our list here in Okta that had a little bit more of a positive message to send. It's just easy.
I don't like opening up covered calls when it's at such a low price.
Appear to be doing better on the
I think
surface,
upside's coming, so that's the hang up I
struggling.
have. But
that's not to say that Snowflake is struggling.
We could hang out at this price for
I don't
months.
think there's a doubt that it is, and it shows today with the stock being just absolutely crushed. Going to say downvote. Downvote in Macy's. Last one's going to be Okta. Going to say upvote here. Another one, though, that's surging to the upside here.
Yeah, surging to the upside, up over 10%.
Day trading too.
I do want to point out that Okta did lose about 70% of its value last year, but
the thing is, though,
it's since seen some strength, and we're finding some footing here.
These
which
options
is up
are
now
kind
about
of crappy.
12% for the year, and today's
Barcoding
move
options
only helping fuel that gain. They did post better than expected results and provided some surprisingly upbeat financial forecasts, showing that companies are still willing to spend money on security-related applications, even in a softening environment.
Look at this.
Very similar sentiment from what we heard from Palo Alto Networks when they reported their quarterly update. But they did post revenue of about 510 million. This was up 33% from a year ago. This put it ahead of the range between 488 and 490 million management had said to expect, and ahead of the street's expectations. So on an adjusted basis, they did post profits of 30 cents per share,
buy shares
and
sell covered calls.
Guidance the company had given, and slightly ahead of what the street
I'm not doing it yet.
For the full year, they did
I don't have any
that was up 43%
any covered calls on it yet. I just have shares. But if I add risk, basically, if I add more risk by buying more shares,
from a year ago. Now for the April quarter,
I'd like to maybe hedge that risk or profit on it. I guess, yeah, hedge more or less. Because a covered call technically is kind of like a short position.
Priority for organizations around
so hedge it with some covered calls.
Is the only independent
if I had
and neutral
more shares than I should have.
That brings market-leading solutions for both workforce.
But I don't know if I want to day trade it or
at this scale. So lots of really,
because with that barcoding, it's just kind of annoying to try and get in and out of it.
Pretty much every metric they had even set out.
Yeah, and the guidance was at least in line with the expectations, so there wasn't a lot to pick apart on this report. I think you also combine it with the fact that, as you said, look at this chart, the stock's been under tremendous pressure. That allows some breathing room for the market to actually respond optimistically. If this stock was up near the highs, maybe this wouldn't have been a good enough report, but the fact that it's been just so much under pressure for the last 52 weeks, coming off the mat here a little bit, getting that optimism here this morning into the afternoon, not on the highs in the pre-market, but still just hanging in there. Going to say up out though for Okta. It'll join Salesforce. Those two cloud companies going to dominate the conversation for the next 20 minutes or so.
Yeah, the cloud winners of the day, at least, both up in the double-digit percentages. So excited to dive into the technicals on both Salesforce as well as Okta coming up next, as well as some example trades. So stick around. Next Gen Investing. We'll be right back.
I'll show you guys here on the paper account. Basically the trade I would do. Excuse me. So remember the cash secured puts we did on here? I'm doing the same trade on my two of my other accounts, but I did on the paper here too. These cash secured puts are up 82%. So that 1,000 credit I received, I can now close a position and realize $825. But basically something like this. Be a buy right. But I probably wouldn't write the cover call right away. I would probably wait for a spike in the morning or something. But it would be buying 10,000 shares, and then selling calls that sell next week, 2 calls, 100 of them. Right, so I'm buying the shares, and then with those shares I have the right to sell calls. So then look what it does. Instead of spending the 15,000 or whatever it is to buy those shares, I'm only spending, what would it be actually? This is gonna keep changing. Yeah, it'd be 15,600 to buy 10,000 shares right now. So instead of it being 15,600, it's gonna be 14,765 because of the 100 covered calls I am selling. You can even do it in one trade, one transaction. And then if it goes up to $2, you're guaranteed a profit. Or if it stays even where it's at right now, you're guaranteed profit. Or even goes up, or it even goes down a little bit. It could go down basically to that. It could go down to 147.65. That'd be my break even on it, on that trade. 147.65. 76. Yeah, it could come down to here and it'd be break even. So instead of buying shares where it's at right now, and my break even's at, you know, $1.57. Buy the shares, do the cover calls, and then your break even's down here. It's a similar idea with the cash grid puts. Up and handle? Yeah, a little bit. I see it. Up, handle. Yeah, not much barcoding today, actually. Hope the options stop barcoding. I'll do this trade on here. So it'll buy the shares and then sell the corporate calls as it fills.
$3 debit. This is a March-April call calendar, so you're selling the March expiration, buying the April. Month over month, in that sense, just a little bit over 2 weeks from tomorrow.
Just chopping around still.
Till that March expiration. Risk defined. The debit.
Wish I got that exit here.
The risk. So $300 is the risk, not accounting for
proper
transaction
V formation.
fees. And because, as we've talked about with this type of trade, you know, so many times, Jenny,
little green
the
candle.
closer it can be to the strike. So in this case, 200, the better. But it's not necessarily all or nothing. You can see sort of illustrated by that risk profile that that's just the apex of the profitability graph. It's possible and possibly even likely that if it's in that region, you know, within a few dollars here or there, that this could still be a relatively profitable trade if it's just near 200. So 192 nearish to 200, 210 nearish to 200 as well. So if it goes to those resistance points, possibly this one can still be profitable. And of course, always the thing that sticks out to me with these calendar spreads is just the customization that they allow for. So for someone who has a different outlook, different time frame potentially, Jenny, there could be other strikes, other expirations within this name or other names that would allow for that added level of you know, that personalization to it to better fit a particular investor's outlook for a particular name.
Right, of course, if someone was, say, betting against Salesforce, this is an easy example trade to then flip it. But our next name today also seeing some strength. I like to talk these names that are higher on a day when we are collectively, and a week when we are really collectively lower, because Okta also having a nice move higher today. Shares are up over 10%. And this name, Rick, is also, I'd say, very technically interesting because it lost 70% of its value last year, like Alex and I were just previously talking about. Now up about 12% for this year, but still down 57% from its high.
Yeah, there's a lot of similarities between this chart and our last one as well. And one thing that stood out to me right away about this chart is you can see how clearly the earnings gaps are here. You can see that, you know, we had this gap downward. It started a new trend heading to the downside. We had this earnings gap upward that started a new upward trend within the boundaries of this channel. So we can see now that the earnings move today took us above our key level, our yellow 21-day exponential moving average near about the 74 level. However, it also stopped at our previous highs near the 82 mark. As you can see right here, we weren't able to crack above those very well here, and we're fading a little bit from that point. So much like our last chart, we had this situation where we encountered some resistance and now we're fading. So we're trading right in the thick of a volume node here as well, near that 82 level. By a volume node, I mean an area of particularly heavy trading according to our volume profile study. And RSI trending upward here. We were back above that 50 mark, but we are not really making new relative highs yet. That's not necessarily a warning sign yet here because we did have a bit of a fade heading into earnings in terms of the momentum there. So that's not uncommon really. Looking at the rest of the chart here, if we are able to break above that 82 mark, just like our last chart, there's another gap that we could see looking to be filled right around probably that 91 level. So that's a point also that bulls might be looking for price to advance up to that point to fill the gap. To the downside, we've got our 21-day EMA, as I said, near about the 73 mark. So 73 to the upside, if we break through 82 to the upside, then 91 is a point to watch.
Okay, so price is sort of, I'd say, exceeding momentum right now, although momentum not necessarily worrisome at current levels. But great breakdown on both of these names, moving significantly higher. Clearly, Rick on the day. We'll leave it there. Our chart master, as always, and Alex, when trading this name, I think this also has a very FOMO-esque feeling to the upside today. So for an example trade, assuming we're going bullish here, and Rick did lay out 82.91 as price levels to watch to the upside.
Yeah, as you mentioned,
I just look for that pre-market.
Like Salesforce, as Rick
it's up there.
The chart looks a lot like Salesforce, and so
what that line's from.
Unironically here, this trade illustration is going to look a lot like what we just looked at in Salesforce. The same strategy. We're going back to the well for this conversation, for this illustration, because there's just so much.
These are old lines
between these two names today. And so again, that bullish feeling of missing out, maybe overwhelming some investors looking for a way to participate in Okta or other names that maybe continue that rally higher. And so I looked at buying a call calendar once again, same expirations, March, April, in 90. So 90 is about half of 200. And if you recall, in Salesforce,
some soft levels.
Debit was 300,
really
$300 in risk. And this one, $1.50 debit, $150 in risk. So about half as expensive for the stock. So the trade makes sense, is about half as expensive on the options front as well. And so looking at this, the risk profile is going to look almost identical. We're targeting that gap that Rick had talked about around that 91 mark. If you're a subscriber of that theory, seeing that gap maybe being filled in the future over the next month and a half, well, this type of a strategy would look to benefit from that taking place. It's just below that 91 mark. At 90, that's the closest strike availability to that gap, and so that's why in this illustration, that's the one that I selected. But again, risk defined, looking for a continued upside move, and just like the conversation in Salesforce, the best case scenario is a move to the strike. But you
Another
can
one
see,
maybe setting up an engulfing candle on the
risk
daily.
Profile is seeking to theoretically kind of show you how this one may perform. Given some of those variables, it's more of a smooth performance. It just does best when it's closest to that strike, but it can still actually be profitable even if it doesn't go perfectly to 90.
Some omnidirectional, I'd say, safety here with this example trade, but a nice post-earnings look at both of these names making significant moves to the upside today. But also important to keep in mind for both of our example trades, they do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying
There's that first little soft level, 164.
Like unanticipated exercise or assignment. Now coming up next,
it's
time for FOMO. Of course, we're talking Tesla. Not on its best day. Shares are down over 6% in reaction to its investor event. We'll dive more into the details on that name coming up next.
Bullish BBBY. Yep, looks good. Why'd you say that though? Look what you did. Broke it. Yep, holding up very nice. 4.5%. Higher highs, higher lows. Setting up a kind of a bull flag even on the hourly here. There goes. Wizard is never late. Help is 12%. Yeah, I think VWAP here is pretty good. I was kind of maybe gonna buy some more if we hit this 152. 145 might come back down there. It's holding up very, very strong though. Made this bull flag now. So we might not see 145 again. But yeah. If it does start to break down, then probably 148. Don't even wait for 145. But if you don't try and just go all in at one price point of the very low, then you'll get a good average and get exposure and help keep you from chasing when it's rallying or missing it from it going without you. Alpha is 11.5. SGM's holding up pretty good above VWAP here too. So yeah, anywhere here I think is a pretty good price. Because it might not come back down here. And you're so close to lows. Yeah, like 136 would have been the best, but you're not that far off of that at all. You're still much lower than we've been most this month. Just zoom out a bit. So you're still at the lows.
Over the last few years, obviously the last 52 weeks, not what shareholders
a few more
have
here.
been looking for, a little bit more choppy, but such is the name of market volatility. A lot of focus will be on, of course, margins, as we talked about inflation so much over the last year. We'll hear their outlook as well. That'll be in focus, because keep in mind, this is a company that we hear from on a monthly basis, so those sales figures. So the actual numbers, a little bit less volatile typically in Salesforce versus those estimates since we're only looking
Picked
at
up
1
some more
month
shares.
of
I think I am going to do the buy
looking
right.
for declining sales growth. Still looking for about 7% year over year, but that is sequentially going down and down and down. So we'll see if they can spur that. Renita Young, great preview here. We're looking forward to this announcement when we get it. And thanks for joining us, Senior Markets Correspondent for the TD Ameritrade Network, Renita Young. Let's bring back in Jenny. It's time for FOMO. In the moment I think that many have been waiting for. It's time to talk some Tesla. You know, Jenny, admittedly, I'm not a huge fanboy of these investor days and earnings announcements and all these analyst calls and everything. I read the cliff notes, but I'm sure you've gotten into the weeds here and I'm going to learn a lot.
You know, actually, I took the liberty upon myself. I just watched all 3.5 hours of their investor day because I assumed the street would get some things wrong, so I wanted to form my own opinion. And I'm so glad, frankly, I did, because today's move would tell you that it was a huge disappointment, a huge flop. I saw the headline, "No news is bad news for Tesla." They gave updates.
I actually watched it too.
Perhaps, though, it was
I
not
can't believe
what
how
the
long
street
it
was
was.
looking for, which, because you can't argue with the price action
I've watched
today.
most of
There is
them.
a degree of disappointment.
There's some cool stuff, some interesting stuff, but yeah, as far as
expectations, you had
even if there was something cool, it's still going to be a sell the
unveil
news type
this new
thing.
Model 3 vehicle starting at around $25,000 to then, of course, follow its Model 3 electric vehicle to help sustain its levels of growth to reach that 20 million car per year by 2030. So the fact that they didn't unveil a new car and those concrete details is, I think, why we are seeing a lot of the selling today. But this event did feature much discussion on their efficiency gains in their manufacturing that the company
what
will
in the
be
world was
making
that?
on its next generation platform. But again, it was a very high level conversation,
What the heck?
not specific details, which is, again, why I'm trying to justify the negativity we're seeing today, because they did also confirm reports that they will be building a new gigafactory in Mexico. This was not a shock, though, because this was announced actually by the Mexico president.
We don't have any data right now.
But the most important element
Not seeing any
of the event,
news. That was a
no
crazy
doubt,
candle.
was that we heard from 16 executives.
Dude, look at the volume on that thing.
Elon Musk, and I think that was
What
really
is
huge.
happening
this is not
there?
Something the company really does.
Holy crap!
He is the sole mouthpiece of the company. So to hear the cohesiveness and really the way each element of its business is working together was very promising,
totally
especially
woke
those
up.
that have questioned Elon Musk as a leader of the company with all of the
probably my
Twitter
favorite meme
drama
stock.
as of late. One innovation they did say is they will be reducing the
And there we are,
expensive
just like that at
silicon
395 that
carbide
resistance.
chips in the next generation of vehicles
After all
by
day
a
of just
whopping
doing nothing and just
They did also
in like
unveil
2
a new
minutes.
lithium refinery expected to be in production
going
in the
on?
next 10 months. So to me, it was like, what more did you want? I thought it was
what
really,
is
really
this? Is this
endearing
spy?
to hear everyone's commitment to sustainability and focus
gotta
really
throw this one on.
away from fossil fuels and being more efficient as themselves. And all in all, Alex, this to me was a long-term investor conference.
What's going on? Someone said something. Oh, Bostic is speaking. No one is. What the heck? Someone's speaking. Bostic said Fed could pause mid to late summer. I think that's what this spike is from. Oh my gosh. BBY starting to move up. That is an insane move on SPY. Just no volatility today and then that. I mean, take this short? I don't know. That's insane. What the heck was that? Is it your favorite too? I like what it did to GME. One Fed guy says one thing, and he doesn't even vote, and this is what happens. Jeez. Broken. Fine, the Fed guy. Yeah, Bostic saying they might pause this summer. Heck. Look at this. This is... I think Bostic is talking. Fed Bostic. He doesn't even vote. It's part of the raising interest rates. I don't think he has any say. A mess. Tech company? Holding up. A move like that could definitely start to wake stuff up. Let's see. This shows the relative strength that GME had earlier. But see that just this little move right here, that's when GME was getting this. So had a lot of relative strength there, and then now this ridiculous move just didn't hit the same at all. Well, the algos picked it up and they pumped. Like watch from streaming, not in meetings. Nice. Ultra wide. You can see these ridiculous meme spikes. That was insane. This is the scary stuff when you're short SPY. Really either direction, but upside on it can get insane. Just out of nowhere from someone saying something. Well, it's at that other point of resistance that I wanted to short it. Should I short it now? This just from here to here is huge though. BBBY at $1.60. Retesting these highs from earlier. GME just got woken up there a bit. Look at this bull flag here on the hourly on BBBY. It's like an ascending bull flag. Still good though. Inverted head and shoulders is still there. I don't think we're gonna come down. I don't even know if we're gonna get back to these levels at all. I'm gonna be patient. I'll probably try and get more here at 150 if we do retest this today. I picked up 1,000 here when we were at VWAP, but I want to get like another 9,000 maybe here and do some cover calls on it. Because let's see, next week, fill our cover calls, $10. Do 100 of them, that's $1,000. $1,000 in premium, so. SPY's holding up though. I feel like the Fed guys, some of them maybe just are messing around. Like, watch this, I'll say this. Watch what happens. Maybe they're insider trading, I don't know, but to say something like that, even though no one said anything even remotely close to pausing this summer, when he doesn't have any voting power, it's like looking at his phone like, yo, check this out. Billions of dollars. Yeah, now it's on Twitter. Walter Bloomberg, Bostic Fed has ways to go in raising interest rates. Bostic, higher rate and endpoint could be needed if economy shows more strength. Bostic, plausible case, past rate rises will slow economy most notably. So those aren't, that's not the quotes. Wonder if there were any calls bought right here and sold here. It's bull flagging though, SPY is at that resistance. Elba is 12%, wants to break there. 13% on Hellbiz. Yeah, they're holding the bullishness. That's gonna keep going. 1541 GME or lower. The same hammer at the bottom. Yeah, I don't know. Today the way it's showing relative strength and waking up a little bit. I actually closed my puts. I averaged more into my calls. So I'd like to see a double bottom, but yeah, I mean I was probably premature. Just this action today was kind of interesting, so seemed like it was starting to wake up. So I'm starting to scale in. I started scaling in long a couple days ago, but got a little bit more today. And if we keep coming down, I'll just get more at this level. Yeah, the volume is tiny. Yeah. Okay. That was crazy. This move is crazy.
Bullets are pressured a little bit. We know wages aren't keeping
looks like it's gonna stick.
Up with the
I
price
saw
of goods
the
that
bull
is
flag.
going
I'm like,
up.
looks like it's gonna
This
keep
is still
going.
discretionary. We
Here
know
we go. It's going.
wallet shares going towards that type of purchases. But at what point is it become worrisome if you're an investor in a company like this?
I think you bring up a really good point here, Alex. At the end of the day, the consumer has been fairly strong for the last year and a half. What happens if we do start to see consumers really starting to focus on the consumer staple side of the economy and then less discretionary spending? That is the reason why I was kind of talking about it earlier. Increasing prices and then cutting costs is great and everything, but at the end of the day, if the consumer shifts, then you have a problem, and then you're going to either have to cut prices or you're going to have to add on additional services and events in order to attract individuals to come to your park. So I think you make a really good point. Last thing I will say, Alex, you could at least maybe ride the teacup that they have over there on the kiddie side of the theme park. I think that's still consider that a roller coaster at this point.
You know, Kevin, I first of all, that cracked me up because I completely agree. And I'm loving that we've been to the same Six Flags, which is like the only Six Flags, I feel like, at least in our area. I was actually the Six Flags grandpa one year for Halloween. So that's how far my affinity,
even she's talking about that dancing guy.
Said,
wow, that really made an impression.
Right now we're seeing this massive shift into these experiences, like travel's getting a lift and, you know, other areas of the economy that are away from goods. So Six Flags to me makes sense that we're seeing a benefit.
Probably going to move up to 50.
Similar sentiment, but like you said, in terms of where it once was on a year-to-date chart, we're still well
tied
off
up there.
I wouldn't. So I'd also say
maybe
even
jumped on
right
a
now,
long here. It felt crazy, but it was bull flagging. It was showing the signs I want to keep going.
You know, at least outside of today, more on this year.
Yeah, I think it's the risk out there, Jenny. And I think if you even look at it from a technical standpoint, we could probably pull up a one-year chart at least. You will see some resistance at that $30 level. So I know that the concern that it goes over 30 and we might not be able to talk about it anymore, but it does have a significant hurdle ahead of it. And that's why we are going to need investors to continue to try to push it over that line. But as we kind of talked about some of the risk that is out there in the marketplace, not only from the consumer, but their strategy right now, which is good in the immediate term, but from a long-term standpoint might not be viable. There could be some headwinds in place here. So I completely agree with you. I think right now an up day, a 5% up day is really great for those shareholders. But I think the question is, what is the strategy moving forward in the event that we do see an economic downturn? You have to have a strategy. You cannot come back and say, well, we didn't foresee this, because every single company out there is making you know, the claim that there could be some downside risk when it comes to the consumer in the latter half of this year.
Senior markets correspondent Kevin Green, always a pleasure. Stocks got a long ways to go. So much damage done in the early parts of last year. But stay tuned, nice little comeback here. Thanks as always. Thanks to Jenny as well. Thanks for tuning in, to you, the viewers, as well. That'll do it for us here on Next Gen Investing. Coming up next, we got the watch list.
$396.20. $396.67. Look at this SPY, dude. high breaking that level. Overbought in the 5-minute. Wow, look at this squeeze. Oh boy. Jeez, there's the next level. Oh my gosh, man. What a clown market. Bear market rally engaged. I mean, this is back to levels that we had on the 28th. 2 days ago we were here. Just erase all those slow melting down. Holy crap. What is happening? Wow, market is really taking that good. I don't know how it's holding so much weight. Oh my gosh. When was the last time we saw a SPY do this? Other than, like, of course, when data comes out. What the heck? Wow. Yeah, this isn't, I mean, this is pushing it up a little bit, but this is, I don't even know. It might, I mean, it might have a move on GME and those might just be delayed. Probably more mega caps that are rallying. No, Tesla's not even going. Apple, yeah. Microsoft. Netflix a bit. That's wild. Bull flag was the great setup right there. That was a huge move. That's like, I don't even know. Like $1,000 in one ES contract. More. Yeah, more. Well.
In future generations of cars, no details on exactly how. And Bernstein and other investors, they don't really believe Tesla can create that $30,000 vehicle by 2025, and they believe that it's going to have to make some cuts to prices to be able to reach its goals until then. But of course, Wedbush Securities' known Tesla bull Dan Ives is a believer. He believes that Tesla is well positioned and has set the stage, in fact, to set this car to be produced and to scale globally, right? Tesla says that it also wants to spend about $180 billion more on becoming the highest producing car company ever. It wants to churn out about 20 billion vehicles next year.
20 billion?
Right, 20 million.
Million,
right.
yes.
I know what you're saying. Yeah, no, I know exactly what you're saying. I think the one thing that came out of that, you know, friends of our network, Ross Gerber and Hatem Diab from Gerber Kawasaki, they both talked about the succession plan of Tesla, and I think that was something that investors at least took away, and they were happy to see all the other executives up there along with Elon Musk, so that this way Tesla shareholders don't have to worry that it's only Elon Musk working on things. So I guess that's supposed to make us all feel better. We will see. Renee,
short up here?
great to
I
see
don't
you.
know.
Thank you very, very much. Great job on both those names.
Maybe
Salesforce
just for a
and
quick
Tesla.
little scalp.
Okay, so let's get to the big picture. Ed Sedell's with us, CEO, Chief Investment Advisor at
20 billion.
Thank you, Ed, for being here. You know, the consumer debt's racking up. That was something in your notes. We still have high inflation. You know, my earlier
You didn't correct yourself. That's what I
today
love.
called the rally
Just left
a
it, just in
bear
case we
market
didn't
rally
know.
of 2023. What's
Oh, that's a lot, it seems like.
Yeah, you know, I think the rally earlier
20
in the
million?
year was
That's
really
right.
just a relief rally or a late Santa rally, however you want to call it, because December was so tough. And I think what we're seeing right now is a little bit of reality setting in. I was honestly surprised the Feds only raised rates 25 basis points in February. I know the markets took off. You had the Dow pushing 3%, the S&P close to 6%, and the NASDAQ at 10%. But, you know, you had a lot of commodities that were over 20, 25, and 30% to include coffee. So that's more inflationary.
That gas
so when
was
James
back up
Bullard
to
said a couple
VWAP
weeks
here.
ago that they expect a 50 basis point rate hike this time, you know, I would be shocked again if we don't see that. And I honestly don't see how we don't keep raising rates for at least the next couple sessions, because I still see a lot of inflationary pressure.
And, you know, while it makes sense, we say, oh, they should do 50 basis points. It seems sort of obvious. We've got the CPI, we've got the PPI, we've got the PCE, we've got jobless claims even today, and we're waiting on the next jobs report to only show us more and more. But you know what? Fed funds futures are not pointing to a 60% or more likelihood of 50 basis points, in which case they really don't go against that. It usually goes in line with what we've bet on Fed funds futures. So based on that, we're not getting 50 basis points.
Bostic, I guess, said
and here's the thing.
They
the Fed's
might pause
rate for inflation is
raising rates this summer.
2%. And when we look at it, the 100-year average,
had a ridiculous
is
rally from
3.1%, and that's through 2020. So my question is, you know, are they going to adjust their target rate up? Because if they don't, they're going to have to keep raising rates. And at what point are they going to stop? Because if they raise them to the point where they need to get down to that 2%, you know, that's really going to put a lot of downward pressure and it could actually break the economy.
Yeah. Tell me about break the economy. What does that mean?
Yeah.
You know, so right now we have so much debt. So whether it's consumer debt, it's an all-time high. We've got a lot of corporate debt, not to mention the national debt. So, you know, when people were borrowing money, the money supply was really big over the last couple of years, especially with credit. So when people are paying, you know, 5%, 6% on their credit cards, and now all of a sudden they're paying 20, 22, 23. Because remember, you know, real wages, they're at 4.4, and, you know, the inflation is over 6%. So they're using that money supply in credit cards to be able to survive. So at what point, you know, do the private banks say, you know what, we're going to go ahead and reduce that money supply and cut off credit? So that's what I'm talking about. As rates continue to go up, they're not going to be able to service that debt. Just like corporations, you know, we're already starting to see bankruptcies for corporations because they borrowed money and they just can't keep up that debt service.
Right. I mean, the 2% inflation target almost seems I don't know. How would you describe that?
I think it's ridiculous. I mean, it's so low. The Feds already have a credibility issue from a couple of years ago when they said, there really wasn't inflation, it was temporary. The problem that they're going to have now is because they set that target so low, if they raise it, they're really going to have a credibility issue. And if they stop raising rates, I think inflation is really going to come back, and then we're going to have our hands full.
Yeah, well, that's the whole thing. I mean, if they stop raising rates and take this pause too early, or in fact pivot too early, then we do have a big problem. Tell me about investors, the portfolios. I mean, you are chief investment advisor, CEO. What do you tell investors who may have some jitters now, long-term, short-term?
Looks like it wants to keep going. Another bull flag here.
It's really about guiding and protecting our clients right now. So I still like short-term, treasuries, less than a year, especially with the debt ceiling issues that we have. But, that one-year treasury is paying over 5%. So that's a good deal. Being very strategic in some of the sectors that we're looking at. I say the same thing every time, Nicole. I really like energy. I think as the summer opens up with China opening up, I think that's going to be a good sector. And honestly, as rates continue to increase, I think financials, that's going to be a good place to go too. But again, having cash on hand, the markets always lead the economy. It's a leading indicator. So, I think we're really going to see some turnaround towards the end of the year. But over the next couple months, I think it's going to be a little rocky.
Yeah, understood. So you like energy, you like financials. And when you like energy, I mean, a lot of these are dividend payers.
Maybe a short here at this
that's
resistance.
Another reason why people liked energy in the first place. Do you think oil itself is moving higher? You mentioned the reopening of China. I mean, there was a headline today, oil moves higher as demand, is evident or something like that.
Yeah, I really do, because that demand is going to get bigger. You got to remember, China's been closed for so long. So there really hasn't been a lot of pressure on demand. But, as the U.S. opens up with China, that driving season, I think right now when oil is low or lower than it has been, it's a great opportunity. And it's safe because remember, these companies have strong balance sheets.
Well, let me ask you this. As China reopens, I mean, do you like things that have to do with the consumer, whether it's, Macau and casinos and traveling and things like that, hotels, cruise lines?
I've never been a fan of, investing in airlines or cruise lines, but, travel is very popular. But as the economy, tightens, my concern is that going to be sustainable? Because remember, it really took off because we were locked down for, over a year, pushing 2 years. So, people, they really wanted to get back out and travel. So I don't know if that's going to continue to be sustainable, especially if people don't have the credit cards to be able to take advantage of those trips.
Yeah. All right, and I know you are concerned about the national debt and taxes for the next generations to come. We'll save that conversation for another day, but a good point. Ed, thank you very much. Ed Siddell, CEO and Chief Investment Advisor at EGSI Financial. Thanks, Ed.
Thanks, Nicole.
Later this hour, a big discussion on stock buybacks. Controversial. People love them. They don't love them. Why are companies like Salesforce buying back shares? Why are others like Tesla staying away from that move?
I don't know where to even close this thing.
I'm joined by the
so far down here.
ETFs to discuss
maybe
rebalancing
here.
of its U.S. cash cows ETF, and we'll look at the top performers in that group, how it's outperformed the overall market. Our panel is ready to talk about Kroger earnings. Stock is trading higher after a strong report and guidance. We'll discuss the outlook for that grocer. But up next, Jeffrey Kleintop from Charles Schwab will join me to take a look at international markets and the global inflation fight. What is he watching, and why is the Bank of Japan so important? Next.
Crazy action on SPY today. Got my stop limit on it. Pretty close to the money, so it might get stopped out, but if we get some fleshiness, that'd be nice. Whew. Oh, here's Silvergate.
Now, aside from the Silvergate news, Bitcoin itself is holding up. In fact, it's at 23,535, up just 5. Now for a look at the bigger picture. Let's bring in Jeffrey Kleintop, Chief Global Investment Strategist at Charles Schwab. Our weekly chat about the global markets, which are crucial to what's happening right here at home. What's your reaction to the latest economic data? I mean, we know CPI, PPI, PCE, pretty much everything has been showing inflation. We got our jobless claims today, under 200,000 again. And so it's just showing us a lot of work for the Fed. What are you watching?
It's not just in the U.S. You just did a nice run through of the inflation indicators and some of the near-term economic ones. We've seen upside economic surprises in every major country over the past month, ranging from leading indicators like the PMI surveys that we've gotten here over the past few days to lagging ones like jobs and jobless claims like you just mentioned. I mean, what a difference a month makes. Central bank terminal rate hike expectations have been marching higher over the course of February and now here in early March. We've almost completely wiped out any expectations for rate cuts in the second half of the year, which were a popular theory back in January. And how much further they have to move, you can see how across countries they've marched higher here, really depends on how much stronger the February data comes in. It's reported this month. Yesterday's PMIs hint at further upside surprises to growth. and inflation. So it's possible we're seeing a building wave of growth and inflation pressures rather than merely 1 month of data. I note the Eurozone CPI data out this morning highlights why central bank officials are sticking to their hawkish tone. Despite warm weather, which saw lower natural gas prices, we still saw core inflation at all-time highs in the Eurozone.
Yeah, and that's the whole thing. I saw that the general number was around 8.5%, but Spain a little bit lower, but France, Germany was above. That was like closer to 9%, right? So you are seeing these hot inflation prints abroad. I almost thought, remember when we used to say, oh, Europe's in recession, but the U.S. is doing great? That's not the story at all. I mean, now it's a completely there's so much going on. You have China reopening and the factories moving and jumping and growing at the fastest pace in 10 years. I mean, there's just a million things going on all over the place. I don't know how you do your job.
It's a lot to keep track of. I think the takeaway from all of this is maybe some of the upside surprise here probably won't be as surprising next time. I mean, I think the market's adjusting, and certainly economists are adjusting to this better economic momentum. And not to say that data is robustly strong everywhere, but just surprisingly strong given where we've come from. I think what this is telling us is that just like COVID had multiple waves, it's possible that growth and inflation may have multiple waves as well. You know, inflation's moved in waves before. It did that in the 1970s. You can see here in this chart that I put together shows the current inflation wave in orange with the first big wave back in the 1970s for the US. It also looks like this for the UK, Canada, Australia, most other countries that have a long inflation series. But like subsequent waves of COVID, maybe subsequent waves of growth and inflation could be milder in their impact, but still cause investors to be nervous about the Fed policy response leading to market volatility. So I guess what I'm saying is maybe don't expect a linear decline in inflation from here, but maybe waves of inflation as we move lower, kind of like what we're going through right now. I think
looks
the
like it's going to
takeaway
go
from that is
again.
more volatility in the stock
Another bull
market,
flag
kind
up
of like
here.
what we've been seeing here in recent days.
Yeah, and some of that has to do with how the dollar moves too. Another question I have for you is the Bank of Japan. So, you know, what's our feeling towards the Bank of Japan as they're doing quantitative easing and we're doing quantitative tightening?
Well, it's kind of rejecting that resistance up there.
It's like when one spouse is saving money and the other one's spending money and you're trying to still, you know, pay the bills. What's going on here?
That's a great way to put it, because that's exactly what's happening on a global basis. I know it's so easy for U.S. investors to get really focused on the Fed. It's easy to overlook other monetary authorities. The Bank of Japan has been a really important factor, but hasn't really changed for 20 years. The Bank of Japan's policy is basically keep interest rates zero for the last 20 years, and that means they've been a very important source of investing funding. You can borrow cheaply in yen and then purchase investments in other countries offering a higher return. This is called the yen carry trade. And since October of last year, the Bank of Japan has actually served to offset the impact of the Fed's quantitative tightening on global financial conditions because they've been doing quantitative easing to try and keep their bond yields low. But now, we've got the change for the first time in a decade, a new leader at the Bank of Japan coming into place in April, suggesting there might be a change to this path, meaning unraveling of all this borrowing that's taken place that's supported assets outside of Japan and a repatriation of capital back to Japan, meaning that this could lead to some turmoil across global markets in the coming months.
Yeah. And thank you for that. And then I start to think here at home. I mean, some people say
buy houses in Japan. They're super cheap still.
With some higher rates.
Real estate might actually start going up in value there.
Mortgage are noticing 7% again. In the meantime, you have consumers racking up debt, high credit card debt. They're dipping into the savings and national debt, which also is a concern. Not only for now, but also for generations ahead, right? Where do the problems stand in the big picture?
Debt is probably the thing that keeps me awake most at night, but it's a long-term concern, not necessarily a near-term one. And often we think about the U.S. and all of that debt and the deficits that we're funding. Where do we run into the wall? Well, I looked at Japan again, just as we talked about the Bank of Japan. Japan is many times the amount of debt relative to its economy that the U.S. does, and it just continues to do QE and keeps keeping rates down. Now that policy might be about to change, but the point is that they've been able to sustain sustain much higher levels of debt for much longer than anyone thought possible. I think the pressure release valve will be in the currency. When we start to see, we begin to get to that point where it's become more difficult to borrow and we're running these massive unsustainable trade and fiscal deficits, I think you'll probably see that in a much weaker decline, a much weaker dollar. And we just haven't seen that yet. Our view is the dollar may begin to decline subject to these pressures over the coming years, but not a crash. And so while I do think these are big longer term problems, it's not like we're hitting a wall here where we're going to fall off a cliff in the near term. At least that's what the history shows us looking outside the U.S.
Yeah, just quickly on international stocks, we talked about that recently. A quick thought, international stocks versus U.S. stocks.
They continue to outperform. And one of the reasons is there are many more higher quality stocks outside the U.S. What I mean by that is lower price to cash flow ratios. Companies generating more cash flow, stronger balance sheets. They've continued to outperform. They have for over a year now. We continue to talk about it here in your show, and they continue to outperform. They've outperformed here in the first quarter. They performed in the fourth quarter. They outperformed all of last year, even as markets were going down. So both on the downside and the upside, low price to cash flow, bottom 20% price to cash flow. You can use screeners on Schwab.com to easily find those types of stocks. They're the ones that are performing well. And again, you'll find more of those outside the U.S. helping to support that international outperformance of U.S. markets.
Jeffrey Kleintop, thank you so much. Don't stay up at night. It's not good. You have to get your REM sleep. Jeffrey Kleintop, Chief Global Investment Strategist, Charles Schwab. Thank you. Coming up next, we'll delve into those stock buybacks, all that talk, what it means. Some companies are doing it, right? Salesforce, some of the energy companies, others are staying away, such as Tesla. We'll get the explanation.
That guy's smart. He knows a lot. I think that'll cause Japanese real estate to actually start moving. Huge, ginormous moves. Buy, about to break out again. Out of this bull flag, this second one on the day. This Bostic pump. Arigato. That took a long this break. 397.26. Might be the beginning of a squeezy rally though on SPY. Back up to 400 before it really drop. This engulfing candle is blaring. We kind of had that RSI divergence too on the hourlies here and here. Oh, there it goes. I can only get 4 of them. Can't fight the trend or the crazy Fed. .61 coming soon? Oh, I don't know. I know, it just looks like, because it just barcodes, it looks like boop, boop, it's about to just boop. It can go. Oh, maybe it's a little false break. I'll put a stop loss on it. I mean, I might actually just hold this because today's candle is looking crazy. Or at least re-enter maybe. We get a sell-off into close at some point. 2:30, we only got 30 minutes of power hour. No labs up 15%. Then we got this one in my free share account. 19 free shares.
Look for. This is about making sure that shareholders don't get diluted by the stock-based compensation that the company's given out. So, it's good that they're buying back stock, but what we really want is management to talk about we're buying back stock because we think the stock is undervalued. That's not what management's commentary at Salesforce is about. It's all about offsetting stock-based compensation. If I look at the stock-based compensation expense for the quarter ended last October, and I do this because they haven't given it yet for this past quarter, it rose 22% year over year. So their stock-based compensation expenses are on the rise. They're buying back stock, to offset that. So again, they're not talking about the stock's valuation at this point. That's what I want to see from management.
Yeah, and also you say how, that helps with stock-based compensation. You also can pair dividends, right? Apple, Microsoft, Cisco Systems, 3 examples of companies that pair dividends with stock buybacks. So you're seeing
Elvis got a bit of a bounce there.
Tech companies doing this, right?
Yeah, and here's the interesting thing, and I always say the difference between buybacks and dividends has to do with the optics. Dividends are right front and center in investors' minds, and we look at Intel, which just slashed its dividend. I mean, for years, dividend cuts just for anybody is considered a death knell. It's been considered just poor management. So companies really hate to have to cut dividends. And so they put more, focus on the dividends sometimes. And the buybacks, they make a big deal about when they announce the plan, but they don't really talk about when they execute the buybacks as often. So, and that's because it's a line item in a, financial filing versus, having to be a disclosure of what the dividend is, when it's payable, and the record date. So you can get away with decreasing your buyback if you need to conserve cash. And a lot of times investors won't, pay attention, and analysts won't even ask questions about it.
Yeah, and there was talk also about Tesla. Even Elon Musk alluded to the fact that he might do 5 to 10 billion in buybacks next year. That was something that a meaningful buyback next year, which would be this year. We're not hearing that. Why do you think Tesla's not doing that at this time?
Well, if you watched their very long Investor Day presentation yesterday, or read any coverage of it, you'll know that what they're outlining is a very capital-intensive future. To become the world's largest car maker, to make sustainables, the world's largest energy resource. That type of future that they've plotted out, there's really no room for buybacks in there. They're going to need their cash flow, to invest. I think there was a slide within their presentations, and it was, essentially, if we have excess capital, we may do buybacks, we may do dividends, but I mean, there doesn't seem to be excess capital on the horizon for them. I can't speak to why Musk would have talked about buybacks last October.
That might have been the rejection right there, 397.26.
Of Tesla's really a drop in the bucket. It's not going to really move the stock that much, other than maybe knee jerk on the on such an announcement. It sounds like they're focused on expanding that business, growing it, selling a lot more cars, and they need to spend their money on that.
Yeah. Ben, great to see you. A great conversation, an important one. Ben Silverman, thank you. Director of Research at Verity Data. Thank you. All right, still ahead in the second half of our show, I'm joined by the president of Pacer ETFs. We'll discuss the rebalancing of its U.S. cash cows ETF, how it's outperformed the overall market. And as we head to break, take a look at winners and losers in the S&P 500.
The average rate on the 30-year fixed mortgage jumped back over 7%. That's like just changed from earlier today. Two and a half? Is that 15-year? 30, wow. We're been the same. That's kind of strange. Is that an ARM? Usually 15 years you get a little lower rate. Nice. Nice. Yeah, I guess it wouldn't be 2.5 anymore if it was ARM. Feel bad for people that did that adjustable rate when the rates were so low. Barcode still active. 158 is the low, 160 is the high. Yeah, I mean, at this point, you can't pay for cash. You could get an ARM now. Or just get it fixed and refi when it comes back down. It's kind of at a sticky spot, though, because the prices of homes haven't come down as much as they should for the rates, so... Because really it should be pretty even, the mortgage rates, like your monthly payment. Because with the prices coming down, you should have lower prices with these higher interest rates. But we've basically just gotten higher interest rates and the house prices haven't really come down. Last run for today, BBY? I don't know. 245 doesn't usually make a power hour run, does it? No, it usually sells off in power hour. Flat. Either flat or drop down to 150 at power hour. Volume is weak, going up. Yeah, actually, that's true. Today's volume is pretty low. Very low compared to yesterday. No, you probably won't see lower than that. I'm saying if you got a new house with the higher rates, you get adjustable. Yeah, we never really got our midday spike. Had it in the morning, but just consolidated, which this is really good though. Very bullish, almost bull flag. 6.5%. Yeah, it is neat.
Increase in the international versions of the cows, iCow, which is pure international, GCow, which is the global, and then eCow, which is emerging markets. They're trading at levels that are far lower overall than our U.S. version of the cows. All single-digit PEs, all double-digit or greater
50 million?
free cash flow yields. And in the case of some of the international, you're talking about 6 or 7 or 8% dividend yields. And so the international markets are at a level because I think they're a little bit ahead of the U.S. on a valuation perspective, that they're now really a tremendous opportunity on a relative basis in terms of where they sit relative to U.S. stocks. And I think people are starting to recognize that and starting to put some money to work there.
Yeah, understood. Last but not least, Zillow Group. I know we talk real estate sometimes. What is it about Zillow? Why does it make the cut other than cash flow?
Well, I mean, it makes the cut because we just went through this massive housing boom, right, where everybody was buying houses and searching for houses, and that's basically their bailiwick, if you will. We'll see what happens. We do rebalance every quarter, which is a great part of the risk management of the strategy. And so if we do go into a housing slowdown and their revenue slowdown as a result, then I would suspect that they would be fairly quickly rotated out of the portfolio.
Yeah. Sean O'Hara, great to chat with you about all of these names.
Thank you.
Nice to see you, President of Pacer ETFs. Thanks. Still ahead, we're going to bring in our panel to talk all about Kroger. Earnings, shopping, groceries, stocks trading higher, strong earnings and guidance next.
Eyes looking bullish. Bullish into power hour. Big volume there. 2.2 million on that candle. Where did it go? No price action. Yeah, I'm looking at it. 1448 is what I'm seeing. The 4800, 25,000. Oh, it's 1449. There's a dark pool print or something. 1447.41. Oh, there it is. You're right. 2,165,000. Interesting. Oh, there's our volume. Just some of it just came in. 2 million worth. Huge, huge. What are you talking about? It fit in perfectly with that whale teeth barcode we're getting. Just a little internalization.
Which has been, for the most part, very cautious guidance. So, we're expecting this year to be, quite a strong year, and that's partly the reason why we raised our estimates and raised our target price.
Right, understood. You both were in the sell category, though, not too long ago, because, Scott, you do have a sell. You are concerned about the competitive landscape. I'm sure there's a lot of costs that go into the world of groceries. Tell me a little bit about why you maintain your sell rating here, Scott.
Thanks, and thanks for having me. I think the number one reason we are sell rated, and I would actually put an exclamation point on that after the report, and the reason is they're losing a lot of volume share, particularly to Walmart. This volume shares, despite what the company said on the call, are actually accelerating according to our research. And so effectively that means the company's over-earning, and I agree that the guidance was probably stronger than expected. It's rallying the stock. But you cannot lose as much share as they are losing and not have to take action eventually. And that's the challenge Kroger has. And then if you layer on later in 2023, likely what is lower inflation rates, potentially a higher unemployment rate. I mean, our outlook is that the economy is very differentiated and kind of at a consensus. We think the economy is likely to fall into a severe recession, higher unemployment, lower inflation, higher competition, already losing a lot of volume share. We think this is a recipe for disaster. And even though the guidance was strong, we think there's little or no chance they make that guidance, so particularly as you get to the back half of the year.
Right, understood. What would change your mind, Scott? I mean, this to you sounds obviously losing market share. You don't, even though the guidance was a little better, this volume of share that they're losing to Walmart. What do they need to do, Scott, to change this around, to stop this, outpouring?
Yeah, well, I mean, they got themselves in a little bit of a pickle, to tell you the truth. I mean, Walmart put up high teens comp and consumables, triple what Kroger's putting up. And they compete more than any two retailers in the world. So it's hard not to look at, it's a different side of the same coin. Unfortunately, the way to reverse that a little bit is to get more promotional, to try to drive the volume back up.
Oh,
that becomes a very difficult
broke the barcode
company to
the upside.
In fact, we look at the acquisition of Albertsons by Kroger.
There's those 2 million shares that were internalized being released.
Get the scale and the synergies, then
they're
to go
$500,000
invest
candle there
in price and become more competitive. Our pricing surveys show them at about a 12% premium to Walmart.
Maybe
so
breakout, maybe.
There.
Yeah. Okay.
Just in time for the SPY to come down.
To the private brands, because maybe it's not all apples to apples. Maybe some of the private brands are doing very well for Kroger. Is that an area of strength, Arun?
I took a short here,
certainly.
actually.
Kroger has a
Engulfing.
very large private label portfolio. It's actually also one of the largest packaged food manufacturers out there because of its private brand portfolio. And it's doing quite well. You know, as long as branded products continue to raise prices,
downs before ups.
and consumers will start to trade down to the private label portfolio, which tends to be higher margin than selling branded products. So that's certainly a strength there, and that's also another way, I think, to drive traffic into your stores. You know, one way to obviously differentiate yourself from other retailers is to offer really strong private label products that that sells exclusively to your store. So. Certainly, we believe,
BBBY at the highs of the day, close to it.
You know, the Albertsons acquisition, I do want to get to that, but I do want to talk about the promotions. Are you concerned about the promotions, or you think it's a good idea? I mean, we saw such great retail sales overall for all the retailers during the holidays.
You just go all in or all out.
Yeah, so, at least for, food and grocery, the promotional environment has been a little bit more benign than, say, those discretionary categories that we've been seeing. But certainly, we expect promotional activity, even in food and beverage, to increase this year. But, I think the positive is that, we're likely not going back to levels, pre-pandemic levels of promotional activity. I think a lot of retailers have become a lot smarter with their promotions, a lot more selective with their promotions.
Shares?
They're getting better ROI from it. And so for Kroger, although we expect not just investments in promotions, but also investments in terms of just lowering prices outright, investments in wages, lots of investments this year. But for Kroger, I think they'll be able to offset most of that with the strength of their private label business, their alternative profit businesses, including Kroger
it just hit the high of that candle.
Digital media business. That's doing quite well. And also this year,
can you stomach a $7,000 drawdown?
Savings. So all these should be offsets for what will be investments as well.
All right, and Scott, quickly, Walmart, Target, Albertsons. Are Walmart and Target buys, and does the merger with Albertsons fare well for Kroger? Quickly.
It's hard to do. It's hard to have this one not just go all in,
gaining a lot of share,
or sell it all at the same time to scale out too.
Categories like apparel, home is something that has to be watched across retail.
It's the rule.
Walmart,
there's exceptions.
This is not the Walmart of yesteryear. Economy is an issue, but we were very, very bullish on Walmart. Target is much more a long-term play. They're doing a lot of good things, but a bad economy is going to hurt them quite a bit, and it already had.
Good thing about it yesterday.
Quickly to the merger, we think it goes through, but those synergies are starting to disappear, given the market share losses, given what we think is the promotional environment, and the need to compete with the likes of Walmart and Aldi. So the synergy numbers of $1 billion, we think are going to end up being less.
Yeah. Thank you both so much.
Yeah, there's some support building. That's true. 161, 160.
R5 Capital. Wonderful to see you both. Thank you. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. I'll see you tomorrow. Keep it right here. Oliver Rennick, Market on Close.
You're going the wrong way. Right into Power Hour. Little CNS close. Fulfill some obligations. $50 million volume coming up. Lightly used. $163 is the high here. Whoa, SPY, what the heck? Power Hour treated you nice. Oh, new high. There goes BBY. There she blows. 165. I took a loss on that little mini ES. It's up 9.5% now. $165. May or may not buy some shares on this breakout. Oh, BBY, cover further. SPY's ripping. Holy smokes. Wow. Engulfing candle doesn't always work. Be thankful we're dealing with thongs? SPY rejected the breakout. Jeez, big rejection. Should have held. Yep, it's probably gonna come down then. That engulfing's still gonna play. This just hit wicked right to that line I have there. Red candle on BBY back down below the high. Yeah, 161, 160, you've got some bid support now. Got a sell wall at 165. Got a bearish MACD crossover on the SPY. Still holding up very well though. Hasn't broken the support. Bed Bath is now just chilling here at the high. That gas is moving up through VWAP. Now SPY is starting to come down, maybe. Still not broken that support. It's fighting a bit, yep. Now SPY is breaking through there. I did see Linux's post. I had puts on GME that I picked up the other day. Back here. Once we kind of broke through this support. Actually, I guess that was yesterday. I closed them out today. I profited. GME's relative strength today was kind of interesting. I still think it's probably going to come down to 16s, kind of double bottom here. So, but it could start ripping at any moment. Sure. I don't know where he drives his data from, so I have a hard time weighing in on it. But yeah, I saw his post. He got like hundreds and hundreds of calls. He just gets weeklies and yeah. But I actually got some calls today when I closed those puts. I got leaps a couple days ago, which I plan on adding once if GME gets down to the 16, 15 range. The calls I got today are 18.5 for end of March, so those are the first shorter dated ones I've gotten. IV is just so low. Kind of an earnings play too, just to cover for the earnings. Yeah, I mean, he's been right before, but he's also been wrong a lot.
Fed commentary too, so
and I think GME might be fixed here. Now. So
stock-specific news flow always to be appreciated on days like today. It's not just Salesforce. We also got more activism. Well, maybe not.
Maybe not.
The story on AMD that I think is pretty interesting is a passive investment, but it's still an investment. And then on the flip side, you got Micron, which gave a weak estimate. But the market is going towards the positive side for chips. It's kind of a weird day in this sector, Renita.
It's a little bit strange, and it's kind of mixed as well. So Micron is expected to have lower margins in the coming quarterly earnings than originally anticipated. And for this, we can think about the consumer, right? Because Micron is one of the semiconductor component companies that creates the components that go into semiconductors for PCs and smartphones. Highly exposed to the consumer, right? And they're concerned that demand for PCs and smartphones is not going to be as high as anticipated in this quarter coming up and for the next few quarters, possibly, if there's a downturn that is definitely coming. But this is proven by research firm IDC, which said that global shipments for PCs alone fell 28% year over year in the fourth quarter. And that was after a 15% drop in the quarter earlier. So that drop is extending, and we can possibly look for it to continue to extend, right? The supply-demand gap is also still pretty wide between PCs. Plus, Micron is cutting 15% of its workforce versus that 10% of its workforce originally discussed. So this certainly shows more pain than the company anticipated that it would say. and it reports its fiscal second quarter earnings on March 28th. It's also dragging down its peers, Wolfspeed,
next Friday, $3.
Semiconductor, both down in sympathy with Micron.
Yeah, it's a pretty interesting move because the overall sector is kind of shrugging it off, but this message does seem very much in line with what we've heard as far as margin pressure goes. I mentioned AMD with Dan Loeb taking a passive stake at Third Point. Stocks had a nice run there. And again,
what's your break even on that?
Battle of one up, one down. The news flow here still positive as chip makers eke out an advance on the day of about 0.5%. So quite a bit of optimism here, Kevin.
Yeah.
Nvidia is also up 3%. I mean, some
You're not
of
going
the
to talk about what happened?
reliables are holding on right now.
Do you guys not know?
Well, with Oliver, it appears to us that the news flow we follow on a daily basis seems to favor AMD, seems to favor Nvidia as the two new darlings of the semiconductor sector, right? It used to be Intel, it used to be Micron in many ways. Now that has shifted because of things like AI and
price over
driverless
306 by
cars
next Friday.
and all these things that not only Nvidia, which is also up 2.3% today, but
kind of a retest.
AMD and Nvidia now
new
seem
support.
to be the drivers.
I mean, it's building support right here.
Interest, when you're getting any movement,
bottom of these candles is barcode.
Those two names, everything
1620.
else. Well, Intel has taken a back seat really to the whole sector. They've got problems that they need to get through, but AMD seems to continue to eat their lunch, and Nvidia, like I said, is the darling of all speculative growth investors.
All right. I will say there's one winner on the day that has been consistent all session, and that is Kroger. So let's not leave them out. Early and strong. Stock's been up, and this is amid the potential lingering kind of issues that the government might be applying to their deal.
Almost 10%.
But market
had a breakout. Now it's kind of subdued a bit.
And this is also amid the slower growth expectation for its peer grocery
There's a bull
store
flag here,
chains,
SPY, I guess.
Right?
I'll
but
give you
Kroger,
that.
those shares are higher on the latest quarterly results. Profit and comp sales beat expectations, and the outlook also was upbeat. Now, adjusted earnings per share was a few cents above expectations.
Getting a little spazzy
Revenue
here on BBBY.
missed expectations, but still up year over year. Same-store sales grew 6%,
there's a flush
beating
down.
expectations. And the company says it expects to keep paying a quarterly dividend, expecting to increase that over time. But the company did pause its share repurchases to focus on the debt reduction following that proposed acquisition of Albertsons. You mentioned that. The company is still going under quite a bit of antitrust scrutiny since it would create arguably the largest grocer or grocery group in the country, or one of the largest certainly, if the two did combine. There's still quite a few more things that need to be plugged in before that deal is definitely made. But for the full year, Kroger is expecting adjusted earnings per share above consensus estimates and same-store sales growth between 1% and 2%. So that actually is slowing growth when you look at it, considering the fact that it saw same-store sales growth 6%.
Little false breakout here on BBBY, looks like hour.
This is a pretty interesting one because it seems, for the most part, like a pretty good, pretty empowered business where you can kind of see maybe the point, all right, if they're able to kind of already dodge some of the worst of the inflationary pressures, and maybe they don't need more pricing power. But there's so many grocery stores that still have kind of a little bit of trouble. And with Amazon and all the delivery online with everything, I still have a little bit of trouble getting the antitrust case. Kevin, real quick thought on this. I mean, this does kind of fit in. Generally, the last year, it's been a pretty good stock.
Well, remember, even though we lean towards the lower priced option, Kroger is still a grocery store. That's still essentials. That's still where the economy is going. Some people choose to go to the nicer grocery stores than, let's say, Walmart or Target. So remember, this is still the economy that's going towards Kroger, not away from them, Oliver.
Okay. All right. Thanks, guys. Interesting day here. Some moving parts. I think we got some big ones in order. Let's talk with Jay Hatfield, Chief Investment Officer at Infrastructure Capital Management, back with us for an update on his more positive view this year. I mean, we are kind of seeing stocks drift away higher, despite what's happening in bonds, despite what's happening in the dollar.
We definitely are,
Can
Jason.
that continue, Jay, or will this be the exception, stocks rallying on a day where yields are ripping?
Thanks, Oliver, for having me on your show. We think that the market action, as you're indicating, is pretty encouraging, that we keep bouncing off this 200-day moving average. Given how bad the news flow has been, you know, the 10-year going over 4%.
We're not going to talk about Bostic and
earlier,
causing this crazy algo-driven pump.
The data we think is misleading.
Talk about a nice rally on 200-day moving average.
CPI and also a strong labor market. But we think that this will attenuate as we get into the second half. There's a huge lag in CPI. It lags reality by about 12 months. We have our own index, CPI-R, that's been flat to negative over this period.
All right, take another loss on that. Let it go.
Bullish,
go on, rally.
Inflation data is going to turn around.
The bull flag played out.
The Fed has no ability to
Engulfing and bearish MACD, you know that.
Forecast inflation or look at real-time inflation. And the market, of course, is going to follow the Fed. So, but the fact that the market's not unhinging and is holding for now, at least at this 200-day, we think is very is encouraging.
Jay, just to be clear and to make sure, when you talk about inflation data going one way or the other or reversing, are we talking about the last year or the last couple months? Because we obviously had the big inflation surge, and then Powell talked up all the disinflation, and then the last print kind of looked like we're inflating again.
Well, there's a critical flaw in CPI. It was converted in 1982 to use the shelter estimate, which is both the survey of owners and also rents. But it's far better to use just housing prices because they're a leading indicator by about 12 months of what happens to shelter costs with a 70% correlation. So when you're looking at CPI-U, what it's really reporting on the fact that we already know, which is inflation in the housing sector peaked at an unimaginable 27% annualized in February of 22. That's why we published CPI-R. We just used Case-Shiller for that component, which is a huge component of CPI, 33% of headline, 42% of core. And so then you know what's going to happen in over the next 6 months to a year. And if the Fed had done that in 2020, they would have started tightening policy over a year before when they did. But they just ignore this data. It's not in their, they're more Phillips curve Keynesian people, so they ignore it, strangely. And so that's why sort of both the Fed and the market, we believe, are behind. Although the market
false break here, let's see.
It's kind of more close to our view that inflation's coming off.
Jay, what's the best place right now to put your money if you do think that the worst for inflation has passed, even if that does come at the price of a bit of a slowdown in the economy?
It is down like 50%
well, we do
on news that they didn't file their
10Q,
I think, 10K.
Earnings season, full earnings season, which would be in April, and then also the data should get better. But we do think it's encouraging. It's bouncing.
Okay, I need to do my video.
So we'd still be conservative. We would
thank you guys for your support today. Fun day in BBY land.
Which are large
up
cap 7% stocks or preferred stocks because they're senior.
Thanks for your likes. 40 of them. Well done.
So maybe we break the 200
subscriptions.
Downside, but you're still getting
ring
yield.
the bell.
Having said that, we do think in the second half you could get a pretty major tech rally. The AI.
Rejecting. But yeah, I'm gonna do my recap video. Thanks guys for
so we actually think our
the support. Thanks Trader. Thanks Jason. Thanks Ace.
Conservative.
Thanks Christopher.
We're 18.5 times next year's earnings, but in an AI-driven tech rally, you
thanks
could
my next
exceed
pair.
that number.
Okay. The whole
later. We'll see you guys on the recap video on the premiere
stuff. Is this like the
or Discord or Theta.
Something the market needs to latch onto, or is it for real, Jay?
And see where BY ends today.
Is this like
very curious. All right, peace out.